Sehr geehrte Damen und Herren,
Ladies and gentlemen, shareholders, in my capacity as chairman of the supervisory board, I assume the chair of the 143rd Annual General Meeting of Wienerberger AG. I'd like to welcome the shareholders of our company and their representatives, the members of the Supervisory Board, the Chairman of the Managing Board, Mr. Scheuch, and the members of the Managing Board, Mr. van Riet and Mr. Windisch. As guests, I welcome Mr. Kerschbaumer as representative of the auditor, the external auditor, KPMG, and the representatives of the media. Mr. Kirchli, Notary Public in Vienna, will certify the decisions taken at today's AGM, and he's going to monitor the voting procedure. At today's AGM, an audio record will be made merely for the purposes of minute keeping and for the notary public. The AGM is being conducted in German but simultaneously interpreted into English. Headsets are available at the entrance to this room. The AGM will be transmitted live on the internet as in previous years. Any shareholder taking the floor has the right to ask for internet transmission to be interrupted during his or her question or comment. In the interest of the smooth conduct of the AGM, I'd like to ask you to switch your mobile phones off. The convocation to the 143rd AGM was published in time in the official Gazette number 73 of Wiener Zeitung on the 13th of April. On the same day, the electronic convocation was distributed throughout Europe via Euro ad hoc. The agenda, which you have a copy of in your folder, was published at the same time. I therefore will abstain from reading out the agenda. Requests for additions or amendments to the agenda were not received. Attendance is being calculated and will be announced before the first vote at the latest. The list of those present will then also be available for inspection at the entrances to this room. As regards the conduct of the AGM, I'd like to announce that the proposals to be voted on all agenda items will first be presented en bloc. Then I will ask the CEO for his report. After your questions have been answered on the individual agenda, votes will be taken on agenda items 2 to 8. In order to ensure a smooth conduct of the question and answer period, I would ask the shareholders to fill in the question forms that have been distributed. You can have additional forms from the attendants in this room. I would ask you to indicate the items on the agenda which your questions refer to, and also please outline the substance of your question so that we can prepare the answer. Please also indicate whether you wish to put your questions yourselves or whether you want me to read them out for you. Please deposit the form in one of the boxes made available by the attendants in the room. Those shareholders who want to put their questions themselves will be asked to do so via the microphone at the rostrum in front of the room. The other questions will be read out by me on the basis of the completed forms. In this context, I would ask you to keep your questions or comments short in order to ensure an expeditious conduct of the meeting. I would also ask you not to put questions that have already been answered, and please bear in mind that other people also want to ask questions, so I reserve the right to take the necessary measures if a speaker is too long. I herewith note that 1,144 shareholders have registered and have submitted their certificate of deposit. The counting of votes takes place on the basis of the subtraction procedure. The no votes and the abstentions will be subtracted from the total number of votes cast, and the majority is calculated on that basis. I reserve the right to modify the procedure if that is necessary. You have received ballot cards. Under the numbers on the ballot card, you are entered in the list of participants. Each share bears the right to one vote. In order to record the voting results, there will be entrance and exit checks at the entrances to this room. So if you leave the room, even on a temporary basis, please check out by means of the barcode reader at the exit from the room. The system will thus register you as absent. When you re-enter the room, you will have to check in, and then you will be registered as present. While we're voting, nobody should leave the room if possible. I would ask those ladies and gentlemen who are casting no votes or abstaining from voting to raise their voting cards. The numbers of the voting cards will be read out aloud. Once your number has been read out, please lower your voting card. The voting procedure will be monitored by the notary public, and the IT service will calculate the results. I should like to point out that the buffet will be opened at 12 o'clock. Alcoholic beverages will only be served after the end of the AGM. As you enter the buffet room, please show your voting card or your guest card. Your voting, you have also received vouchers together with your voting or guest cards that entitled you to a starter, a main dish, and a dessert. I would now like to proceed to the agenda of today's AGM. Item 1 on the agenda. A presentation of the approved annual financial statements for the 2011 financial years and the review of operations for the group, which was combined with the review of operations for the company, the corporate governance report, the consolidated financial statements for the 2011 financial year, and the report of the supervisory board on the 2011 financial year. The annual report 2011 is available for shareholders at the headquarters of the company and can be downloaded from the website of the company. The annual report was also available this morning in the lobby to the Austria Conference Center. I therefore abstain from reading out this document. The annual financial statements for 2011 drawn up by the Managing Board and the consolidated financial statements drawn up in accordance with IFRS were audited by KPMG Vienna and received an unqualified audit opinion. The auditors further confirmed that the review of operations of Wienerberger AG and the consolidated review of operations are consistent with the annual accounts and the consolidated annual accounts, and that a corporate governance report has been drawn up in accordance with the provisions of the Austrian Company Code. The Audit Committee of the Supervisory Board, on the basis of the written reports presented by the auditors, examined the financial statements and the review of operations and recommended their approval to the Supervisory Board. At its meeting on the 28th of April, the Supervisory Board then approved the annual financial statements of Wienerberger as of the 31st of December 2011, as well as the review of operations, and thus officially adopted the annual financial statements and agreed to the review of operations. I would also like to report that the Supervisory Board held 6 meetings in the year under review. The Audit Committee held 6 meetings. The Strategy Committee held 4 meetings. The reports by the Managing Board were discussed in great details. Transactions that require approval by the Supervisory Board were examined and approval was given. In my capacity as Chairman of the Supervisory Board, I've been in continuous contact with CEO Scheich in order to discuss questions of corporate strategy and the priorities to be discussed at Supervisory Board meetings. The members of the Supervisory Board for their activities in 2011 received remuneration in the amount of 501,250. This corresponds to the schedule of remuneration adopted at the 142nd AGM on the 13th of May 2011. I move on to item 2 on the agenda, resolution on the use of profit as shown in the annual financial statements for 2011. The net profit shown in the financial statements is 15,396,000 euros. The proposal reads as follows. The Managing Board and the Supervisory Board recommend that the annual general meeting approve a dividend payment of euro 0.12 per share, i.e. a total dividend of 14,103,211 on issued capital of 117,526,764, less a proportional amount of 295,696.56 for treasury share, for a total distribution of 13,807,515 from retained earnings, and to carry forward the remaining 1,192,881 to the new accounts. The dividend is to be paid out from 18th May 2012. Details will be announced in the Official Gazette of Wiener Zeitung. I move on to item 3, release of the members of the Managing Board from liability for the 2011 financial year. The Managing Board and the Supervisory Board recommend that the annual general meeting approve the release from liability of the persons who served on the Managing Board during the 2011 financial year. Item 4 on the agenda, release of the members of the Supervisory Board from liability for the 2011 financial year. The proposal is as follows. Proposal by the Managing Board and the Supervisory Board. It reads as follows. The Managing Board and the Supervisory Board recommend that the annual general meeting approve the release from liability of the persons who served on the Supervisory Board during the 2011 financial year. Item 5 on the agenda, a reduction in the number of members on the Supervisory Board. We have the following proposal recommended by the Supervisory Board. The Supervisory Board recommends that the AGM approve a reduction in the size of the Supervisory Board of Wienerberger AG within the limit defined by the Articles of Association, which is 3 to 10 members, from the current level of 9 members by 1 person to a total of 8 members. The number of Supervisory Board members in the course of the new election of Mrs. Prehofer. Last year was increased from 8 to 9 members. Then already I announced that in the future the number of members would have to be reduced. The Supervisory Board in the year under review intensively dealt with the efficiency of its own functions and with succession planning. A comprehensive evaluation of its responsibilities and tasks with the assistance of an internal consultant was carried out. As a result of this evaluation, a requirements profile was drawn up for new Supervisory Board members. In the spring of 2012, the Supervisory Board set an age limit according to which members who have completed their 70th year have to step down at the next AGM. This applies to Mr. Rauch this year, and at the end of the 143rd AGM, Mr. Rauch will step down from office. Re-election or new election is not provided for. Mr. Rauch has been a member of the Supervisory Board since the 135th AGM on the 11th of May 2004. Mr. Rauch has always participated actively in the meetings of the Supervisory Board and the Personnel Committee. He was a member of that. On the basis of his profound professional experience gained within the Rauch Group, a traditional Austrian family business, he was able to make valuable contributions to the discussions and the work of the Supervisory Board. This was of great importance, in particular with regard to the intensified sales and marketing orientation of the Wienerberger Group. Today, after 8 important years, Mr. Rauch's mandate comes to a conclusion. We would like to thank Mr. Rauch for his commitment and his dedication to the Wienerberger company. We will always look back to a very productive time with Mr. Rauch on the Supervisory Board of Wienerberger AG. I move on to item 6 of the agenda, election of the auditor for the annual financial statements and consolidated financial statements for 2012. We have a proposal from the Supervisory Board, which reads as follows. The Supervisory Board recommends that the annual general meeting elect KPMG to audit the annual financial statements and the consolidated financial statements for the 2012 financial year. I'd like to point out that KPMG, which audited the 2011 financial statements and consolidated financial statements, has changed its legal structure, and it's now called KPMG Wirtschaftsprüfungs- und Steuerberatungs AG. We have a letter from KPMG indicated there are no reasons for any concern regarding KPMG being biased, and KPMG has a valid certificate certifying its participation in an external quality assurance system. I'd also like to point out that in case a KPMG is elected auditor for this current business year, the lead auditor will change. Instead of Mr. Hirschberg, the lead auditor will be Mr. Zachel. Mr. Kerschbaumer will continue in his function as responsible audit partner and supervise the audit. Item 7 on the agenda, amendment to the Articles of Association, securitization of shares, reduction in control threshold. The proposals are as follows. 7A, the Managing Board and the Supervisory Board recommend that the AGM approve the following amendments to the Articles of Association. Paragraph 4.2 will read, the registered capital shall be divided in 117,526,764 shares with 0 par value. The new paragraph 7 is to read: the shares shall be securitized in a global certificate that is deposited with the Central Securities Depository Bank. An amendment to the Austrian company law that took effect on the 1st of August 2011 resulted in a change to Austrian stock corporation law. Publicly traded stock companies may still issue bearer shares, but as of the 1st of January 2014, these shares must be securitized in a global certificate that is deposited with the Central Securities Depository Bank. Furthermore, corporate managing and supervisory boards must recommend amendments to the Articles of Association to meet this new requirement before the 1st of January. Any content in the Articles of Association that contradict the new provisions will not be applicable after 31st December 2013. A comparison of the old and new versions of the Articles of Association is attached to this document and is available for review on the company's website under www.wienerberger.com. 7b. The Managing Board and the Supervisory Board recommend that the Annual General Meeting approve the following addition to the Articles of Association. The following amendment, paragraph entitled Attainment of Control. The new paragraph will read: the threshold for the attainment of a controlling interest as defined in section 22, para 2 of the Austrian Takeover Act shall be reduced to 20% in accordance with section 27, para 1, first line of the Austrian Takeover Act. All the company's shares represent free float. If an investor holds 20% of voting rights, it would be possible to attain a relative voting majority in the annual general meeting. This would create a situation where an investor can exercise control over the company. The threshold of 30% of voting rights defined in the Austrian Takeover Act therefore appears to be too high to protect the justifiable interests of the company's shareholders in preserving their legal rights under the Austrian Takeover Act. The Austrian Takeover Act allows the annual general meeting to reduce the control threshold through an amendment to the Articles of Association, which would give free-float shareholders greater protection at an earlier stage in any actions taken to gain control. Given the broad shareholder structure, the reduction of the control threshold to 20% is to be seen as a direct consequence of the possibilities for influencing the annual general meeting that are open to an investor who controls 20% of the company's voting rights. Accordingly, this addition to the Articles of Association is considered appropriate to protect shareholders. A comparison of the old and new versions of the Articles of Association is attached to this document and is available for a review on the company's website. The comparison of the old and new versions is also included in print in your folder. Shareholders, I'd like to take the floor very briefly to explain what we mean. The Supervisory Board and the Managing Board are making this proposal for a very simple reason. We are one of the few free-float companies in Vienna, and we want to increase transparency. And if one shareholder had 30% of the shares, that would be a clear majority. We want to create greater transparency, also not only as far as presence at the AGM is concerned, but also for the event of a takeover. It is certainly a proposal made in your own interest, and I would ask for your approval of this proposal later on. So we move on to item 8 on the agenda, resolution authorizing the buyback and sale of treasury shares. The Managing Board and the Supervisory Board have drafted the following proposal. The Managing Board and the Supervisory Board recommend that the AGM authorize the Managing Board in accordance with Section 65, Para 1, Line 8 of the Austrian Stock Corporation Act to repurchase the company's shares up to the maximum amount permitted by law during a period of 30 months, beginning on the date of this resolution is passed, whereby the price for this buyback may not be higher than twice the stock exchange price on the 11th of May 2012 and not lower than €1 per share. Furthermore, the Managing Board will be authorized without a further resolution by the annual general meeting to withdraw or resell these repurchased shares, or to sell these repurchased shares in another manner than over the stock exchange or through a public tender. This authorization replaces the authorization of the repurchase of the company's shares that was approved by the AGM on the 20th of May 2010. A report on this item is contained in your folders and can also be downloaded from the internet. Here we are talking about the extension of an authorization already granted in 2010. Its scope is limited to the granting of shares against contributions in kind. And with this, I'd like to hand over to CEO Scheuch.
Thank you very much. Once again, a cordial welcome on behalf of the board, Willy van Riet, Dr. Windisch, and also on behalf of the thousands of employees of Wienerberger. Welcome to the shareholders present at this annual general meeting. Together with my colleagues, I will give a brief presentation giving you an overview of the development of markets in recent years. We will briefly outline our strategy for the coming years. Willy van Riet will then talk about the financing and the results. I will talk about shares and dividends and will also give you an outlook. Let's start with 2011. New residential construction, a major part of our business. Our bricks mostly are used for new construction. Developments differed and sometimes were very difficult. Let's start with North America. Our market, the family home market, showed a decrease of 9% in America. In Western Europe, the situation was somewhat better. Germany showed a plus of 9%, very good development, the same in France. A bit weaker in Belgium and a stable development in the two other big markets in Western Europe, the Netherlands. United Kingdom is on a low level and Italy is weak. The segment which Wienerberger benefited from for many years, that is to say the Eastern European market, of course showed a decline with the exception of our strongest market, Poland, a slight growth in the 1 and 2 family home market. But the trend is negative and indeed we are working in a very difficult economic environment there. I will not give you an extensive overview of the macroeconomic situation. You know that banks, of course, providing loans for construction play a very important role. Consumer confidence, again, is a major factor. People in Eastern Europe have lost confidence. Increasing unemployment, of course, also plays a role, and economic growth per se is limited. And last but not least, another negative contributing factor, the discussion about sovereign debt. Now let's take a look at the renovation sector, another segment. Here you can see that our strategy, of course, is to also focus on this market because it is more stable than the new construction segment. As you can see, Western Europe showed a stable growth even during times of crisis, and in Eastern Europe as well. we see that in Poland, Hungary and Bulgaria there was a positive trend. The Balkan region, Southeastern Europe, by and large was negative, and this is also true for the Romanian market. Summing up, the market environment in 2011 was very challenging and difficult for Wienerberger. But there's good news, ladies and gentlemen, shareholders. We see a positive environment in terms of growth. Here you have the major markets for Wienerberger in Europe, where we actually outperformed the markets in those segments that are relevant for us. This was due to great efforts in our operational business, and as I've already indicated last year, we also focused on innovations, new products, new product groups. So in almost all markets, we did outperform the markets. Let's briefly look at the individual markets. The most important single market is Germany, with 16% of our turnover. Both in the renovation segment and in the new construction segment, we achieved slight growth rates for over 10 years. Germany showed a downward trend in the construction industry. And in 2010 and 2011, we could see a positive trend. From this chart, you can see that we had an increase of 7% in revenues and also higher average prices for all of our products. Thus, and this is important for you, we managed to regain market shares in the brick sector, in the relevant market segments. Switzerland, a stable market. Here we had slight growth in new construction and also in the renovation segment. Revenues rose by 12%, and again we could achieve higher average prices. Northwest Europe, Belgium and the Netherlands, both showed slow growth in the relevant segments, but with a plus of 13 and 9%, we did very well in all the segments, meaning clay blocks, facade bricks, and also roof tiles. Another important market, France. Here, ladies and gentlemen, for the first time in our history, we found that France used more bricks for the construction of family homes than concrete. So over the last 10 years, we succeeded in gaining market shares in France, and we now have a very solid position. Revenue rose by 20%. United Kingdom, here again, we could increase our revenue by 9% and regain market shares. Let me now take a look at the more difficult regions. Central East Europe, we had a slight growth in Poland, 6%. And we achieved good growth rates in the Czech Republic and also in Austria. So Wienerberger's performance there was good, very good, given the difficult environment. In North America, United States, we had a decrease of 6% as far as revenue goes. We are not happy about that, but again, there is a relative reversal of the trend. I'll come back to that later. Let me sum up. We managed to reverse the trend, to restructure Wienerberger, and we could gain new market shares in all the relevant markets. And what is important for you, the shareholders, we could also increase prices. All this led to a revenue increase of 16%. That is to say, we have exceeded the 2 billion mark, and operating EBITDA shows a plus of 23%. And this was our major goal. We are now making profits again. Thus, the structural reform of Wienerberger is completed. Of course, the market environment will remain difficult in the future, but we have new innovative products, and solutions. Let's take a look at Wienerberger's strategy. We were a company focused on expansion, on acquisition, on new construction. This characterized Wienerberger up until 2009. Then, of course, there was the crisis, particularly in the new residential construction sector. So we had to resort to restructuring. This was a difficult situation for all of us. More than 50 locations had to be closed down. We had to reduce fixed costs. Working capital was significantly reduced, particularly inventories. And, of course, we also limited our capex. So today, the company is healthier, it's fitter, and shows a better cost structure than in the past. There's still a lot that remains to be done, of course, because individual business units need to be further developed. However, we succeeded in positioning our company as a supplier of future-oriented building material solutions. As I've already indicated, we have a very strong balance sheet. Gearing is 18% only. So here we are in the top segment of the building material companies. We have a large headroom to covenants on bank debt. And as regards liquidity and term structure, we managed to have a very well-balanced structure of our liabilities, and we have a cash reserve of slightly more than 500 million euros. So Wienerberger today is strong and well-positioned. This, of course, leaves us room for maneuver, and we will then be able to benefit from developments on the capital market. Ladies and gentlemen, shareholders, of course, we are continuously confronted with new challenges. Business has changed significantly. We can no longer anticipate what's going to happen when comparing the situation today with that 5 years ago. There are increasing uncertainties, particularly regarding consumer confidence in Europe. In our markets, also we need to consider problems with financing in the construction sector and in the processing industries. Of course, there are financing difficulties. So this is the situation that we're confronted with. What we need at Wienerberger is operational excellence. We need to optimize over and over again. We need to cut costs. This is what we need to do, and I will show you a few examples later on. Another point, particularly in times of crisis, we would expect government on a local or national or international level, regulations would reduce regulations. So the opposite is true. We are confronted with an increasing number of regulations when it comes to energy efficiency, recycling, life cycle of our products or other areas. So we are confronted with an increasingly competitive market environment. We need to cope with these challenges, and we focus on innovation. Mr. Windisch, in his presentation, will show you a few examples illustrating how we could reposition ourselves and make our company even more competitive. We are confronted with a challenging market environment day after day. The residential construction sector, particularly in Europe, is at a very low level. In some of the Eastern European countries, it's at a record low. We all assume that this is going to change. People need homes, building activity will be necessary. But what is obvious is that Wienerberger needs to diversify and to use market opportunities in other areas. This is why we focus on renovation And we are not just a supplier of bricks, rather we offer a system, entire systems, because customers want system solutions. They do not just think of individual building materials, they are thinking in terms of energy efficient homes. They want to be offered solutions, and of course we also want to broaden our core business. Let me give you a few examples of operational excellence, even in this difficult market environment. It's like a roller coaster ride. There are many ups and downs, weekly ups and downs. So when it comes to planning of production, the situation, of course, is difficult. This is why we have set up a supply chain management in order to improve and facilitate planning, and we distribute our products over our locations and plants in order to reduce production costs. So the Wienerberger management, of course, focuses on optimization and improvement of performance. Another important topic, of course, is innovation. Mr. Windisch will talk about that. Marketing and distribution. Of course, this does not mean that we neglect production, but many markets have become a supplier market rather than a demand-driven market. And we need to adapt to this situation. And we will also focus on additional products. We had a core business that focused on new construction. When looking back 5 years ago, this distribution was even more extreme, more than 80% new construction and very little renovation. Prior to the acquisition of Pipelife, the ratio was 70 to 30, and after the pipeline acquisition, we will reach 60 to 40%. That is to say, our base has become much broader and more solid, and we are less dependent on cyclical developments in the residential construction sector. One of the goals of the management board when we took over Wienerberger in 2009 was to streamline Wienerberger's industrial portfolio. We are strong in the wall segment. We have restructured the roof segment, 50%. We have a market share of 50% in Europe, together with ceramic and Tondach. The facade business was restructured in Europe and in America, and regarding pipe systems and pavers, with the takeover of Pipelife, which I will report upon, Pipelife has now been integrated 100%, so we have a very strong second pillar. So this is the portfolio that we want to use for further growth in the future. As you know, ladies and gentlemen, we've had a joint venture with Solvay, a Belgian group, for more than 20 years. There were strategic changes because Solvay took over a big chemical company in France, and for us it became possible to take over the other 50%. Pipelife is not a commodity supplier of pipes, rather it operates in the middle and top segment, which I will illustrate by showing you a few examples. In Europe, we are very strong. We are number 1, 2, or 3 when it comes to market presence. 800 million revenues, so it's a big company. We will have another 2,600 employees, and the EBITDA is almost 70 million euros. So this is a very strong company. Pipelife is active in the following areas: sewage and rainwater management. This accounts for about 45% of the revenues. So it's not simple pipe systems, it's drainage or irrigation systems. You can see a few pictures here on this chart, and there are examples also shown outside. So the idea is to retain water during strong rainfall and drain it later on. This is the principle of storm box. So we have a number of applications, and as I've already indicated, Pipelife is positioned in the top segment. Buildings here, this segment accounts for almost 20%. We focus on indoor and soil waste. We want to grow in this segment because it fits into our overall product line, and we want to become a very strong supplier. Then utilities, that is to say gas supply. Here this is a very strong segment with almost 30%, and we want to increase our activities further. And finally, industrial and specialties, large diameter pipes, more than 1 meter. These pipes, of course, are used in the gas pipeline and oil industry. So we now have a much broader portfolio, a portfolio that is crisis resistant. We have a company that we've known for more than 20 years. It's well managed. There are no risks. And this is why we decided to take over 100% of Pipelife and integrate it in Wienerberger. This is something that we are going to do in the coming weeks. The European Commission has approved the takeover. The Turkish authorities have also agreed. We will have a plant there. The Russian authorities will give their approval. We are waiting for their formal approval and expect to obtain it in the coming weeks. So, closing of this transaction will mean that in the second half of the year we will have full consolidation. So this has been a very important step for Wienerberger, a future-oriented step towards growth, and the management board feels that it's also a profitable step. Tondach-Kleinstetten should also be mentioned. Again, a very important step to round off our portfolio, particularly in Eastern and Central Europe. Tondach-Kleinstetten is a strong, solid company. 2 Styrian families hold 50%, the other 50% are held by Wienerberger. We have the same objectives. Tondach-Kleinstetten is a very modern, efficient plant network. It's one of the strongest brands, well known in Austria, of course. And with this, I think we have strong access to decision makers. Consolidation took place in 2011. In 2011, the market environment in Central and Eastern Europe for bricks was difficult. The situation was a bit better in Austria and the Czech Republic. No investments will be necessary in the future. We have plants that are highly energy efficient, so this is a sound basis for further growth, also in the Ukraine and Russia. Of course, this is also a seasonal business. In Eastern Europe, Tondach business during the first half of the year is usually a bit weaker, and then stronger in the second half of the year. This is due to building and renovation activities. So we expect to get sustainable growth for Wienerberger. Now I'd like to hand over to Mr. Windisch, who will talk about new growth opportunities for Wienerberger. Hans, you have the floor.
Thank you, Heimo. Ladies and gentlemen, I'd like to continue with 2 essential building blocks of our future growth. You have just heard about our overall strategy. The first building block is innovation. The second is emerging markets. When we're talking about innovation, we're talking about our future, our core competencies. And in our 4 segments, wall, facade, roof and pipe systems, we're about to further develop our competencies, focusing on innovative products as well as process optimization, which was already referred to. We are moving towards energy-efficient building, and in particular residential building concepts. Talking about the individual segments, as far as wall products are concerned, we have marketed, in fact we marketed already a year ago, our infill bricks. These bricks are based on mineral wool and perlite as infill material. These are materials that offer a very high degree of thermal insulation. We are beginning to penetrate the market, starting in Germany, Austria, Czech Republic, and we are preparing the rollout for further countries. With these products, we're able to meet the requirements of the 2020 Buildings Directive, so we are well prepared for the future. The second important innovation in the wall segment is dry-fix. Dry-fix permits highly efficient processing. It's a masonry glue that comes out of a can that is easy to handle, that speeds up masonry work and allows work to continue down to temperatures of -5 degrees centigrade. In Austria and in Slovakia, as well as the Czech Republic, this product is very well accepted, and we're about to introduce the product also in Germany. In Germany, it took more time to get the necessary approvals for the new product. Another innovative product is based on synergies with Pipelife. We are introducing a wall tempering system which we have developed. At low water temperatures, a highly efficient use of energy for space heating is possible, and as you will be seeing later, this has already been implemented in our E4 house. Well, let me move on to the facade segment. Here we have a great variety of new colors and formats, different appearances. I'd like to single out the Argeton system. These are clay facade elements that can be used for new buildings, but also for renovation, in housing construction. Systems of this type can be assembled on walls. Insulating material can be placed in between, so that permits the optimization of buildings in terms of thermal insulation. The products are produced in Germany, and we export them all over the world, even to China, India, and Russia. Last year, we developed Arge Light, which is the same kind of application, but simplified. Material input has been reduced, so that makes it more cost-effective and simpler to use in single-family home building. Again, it can be used for new buildings, but also for the upgrading of the thermal insulation of existing buildings. Let me move on to the roof segment. I think I already told you last year that we have completed our system and added non-ceramic components, It is our goal to be a one-stop shop provider for roof setters. We've further expanded our system offer. We're now also offering insulating materials. So in new build and in renovation, we hope to be able to offer the right system for excellent thermal insulation. Well, let me move on to pavers. As far as pavers are concerned, we've introduced numerous new products, new surfaces. We've now integrated LED elements into our pavers. That is a very interesting solution from the architectural point of view, and it's a highly efficient way of providing lighting. Other products in the paving segment are also highly innovative. We've introduced pavers with clay spacers. Now, what does that mean? What's the purpose of the clay spacers? There is an advantage in setting the pavers and you don't need to fill and compact the joint. This allows far better drainage. So it has a double advantage: easier alignment of the pavers and better drainage. As far as pipe systems are concerned, ceramic pipes in particular, we have a unique product there. I'm talking about jacking pipes. It's a trenchless system of construction. A hole is drilled into the ground, and then the jacking pipes are introduced step by step, so you don't need to dig up the road or whatever. All you do need is a shaft every 200 to 250 meters, but the rest is trenchless construction. So the pipes are jacked underground. These pipes come in diameters of up to 1.5 meters. That's a great advantage, particularly in urban areas, because it's much more cost efficient. It's a unique solution which we're able to offer through Steinzeug Caramo. Moving on to pipe life, that is plastic pipes. This is the so-called storm box. A plastic box or several plastic boxes that are placed adjacent to each other and that constitute an underground water storage. In the case of heavy rainfall, the water is collected in these boxes via the drainage ducts. The water is drained into the boxes, and from there it can be drained gradually, so that prevents flooding of roads. And this system is being used over large area. It helps to take some of the burden off the sewer system in the case of heavy rainfall events. So these are the building blocks which we're using from the wall, roof, facade and paving segment. Altogether, these segments are combined in the E4 housing concept. E4 stands for environment, economic efficiency, emotion, and energy, of course. This is the E4 house built in Zwettl, which is a rather cold region of Austria. It's an E4 brick house built as a pilot project, and by 2020, 33,600 kilograms of CO2 can be saved through such a house. This house does not consume any energy, but is active in terms of energy production. It generates energy. Now, can such a building system be economically efficient? Can it be cost effective? Now, we've been cooperating with universities, with economists, with industrial partners, and we've developed an affordable concept. Construction costs will be 1,700 euros per square meter. In Vienna, for social housing, costs are between 1,300 and 1,400 euros per square meter for social housing in Vienna. And in single-family homes, so far, costs have ranged between 1,600 and 2,100 euros. So our concept is cost-effective in terms of construction and, above all, in terms of subsequent use. Here again, are 4 segments: wall, facade, roof, and pipe systems. So these combine to form an energy-efficient housing concept. We are working on the most efficient possible use of our products. And on that basis, we can offer an energy-efficient housing concept. Our second building block is emerging markets. You know that we are focusing on core competences and no longer on strong growth and expansion throughout all our regions. But there are 2 markets which we entered in recent years that are worthwhile reporting on. One is Russia. Where do we stand in Russia? We are present in the Moscow region. We have 2 plants. We started our operations there in 2006. We have 1 block plant and 1 combined block and facing brick plant. And we have a plant in Tatarstan, near the capital of Kazan, a block plant. We hope to be able to cover much of the construction activities in Russia, Moscow accounting for 15 to 18% and Tatarstan accounting for 5% of construction activities in Russia. That represents a good basis for our activities. Our production volume and our sales have been increased. They were increased significantly in 2010 and 2011. We also increased the efficiency of our plants, and our products with high thermal insulation properties have been placed in the market quite successfully. In India, we are represented in the Bangalore region. It's a clay block plant. Our plant is located in the right place, in the right region. We are in the process of further optimizing the plant, and our products are very well accepted in the market. High market acceptance is the basis for considering a further expansion in the region. Altogether, we've gained valuable experience in the 2 countries. We have a strong management team on site managers who know exactly what can be done and what needs to be done in these countries, and we are well prepared for further steps. By way of summary, there is Wienerberger's new strategic orientation, which is based on our strong bases, on our operational base. It's based on operational excellence. This is our goal. We want to promote operational excellence in all areas. We have a strong capital structure, and we are pursuing organic growth through innovation and the offer of comprehensive system solutions. Ladies and gentlemen, let me briefly report about the results for 2011 and financing in 2011. We communicated our results already at the end of February to the market. Therefore, I will be brief. Our revenues have increased by 16% in 2011 over 2010. Operating EBITDA, an increase by 23%. We're now at 258.6 million. This includes part of the restructuring costs. We still had restructuring costs in the United States, for example. We had to restructure at a cost of 2 to 3 million to position the company for the markets in 2012. Depreciation, 210 million compared with 200 million in 2010. This includes the consolidation of Tondach with a relatively high depreciation, but in addition to that, we had an additional depreciation of 13 million on mothballed plants and a 4 million impairment on plant and equipment. Goodwill impairment, and that results in an operating EBIT of 48.5 million compared with 10.7 million the year before, despite a special depreciation and despite the higher restructuring costs. As every year, we looked at impairment charges to goodwill, 2.6 million. This is primarily goodwill in the Serbian market, which is quite small. All the rest, there was no reason for an impairment. We had a one-off effect of the Bramag-Tondach share swap. We made a swap of 50% in Bramag against 25%, an additional 25% in Tondach-Kleinstetten. All that resulted in a non-recurrent result of 33 million. Our financial result is down by about 20 million, which is due to, the minus is down by 20 million. That is due to the results from Pipelife. Operations in Spain and Portugal were closed. That resulted in non-recurrent losses for Pipelife, which we no longer have on our books. This year, we have lower debts, better financial results, and after a higher tax rate, which went from 15% to 18%, because we are earning a profit in Western European markets that have higher tax rates. Nevertheless, we have a positive result, profit after tax of 40 million compared with minus 34.9 million last year. I think that was a good performance considering the market environment of 2011. As regards the breakdown of revenues and results by region, you can see the figures for the previous year in brackets. You can see that the contribution from Northwestern Europe is high, 53% of EBITDA. Central and Eastern Europe accounts for 40% of EBITDA compared with 29% of revenues. Our roof tile business, which is largely a renovation business, contributes 26% to sales, but to revenues, but 48% to EBITDA. Facade, only 16%, wall, 34% contribution to EBITDA. Facade has gone down because of the weak performance in the United States. Organic growth is very important for us. We had an increase in revenue by 16%. 9% of that is organic growth. 7% is accounted for by the first-time consolidation of Tondach and Steinzeuge. 14% of the 16% increase is accounted for by volume, so higher volume sold, and 2% is accounted for by prices. 2%, that seems not very much, but if you remember, in 2009 and 2010, our prices dropped by as much as 10% in certain markets. So we succeeded in 2011 in gradually increasing our prices and in obtaining a price increase by 2% for the full year, which is practically equal to the cost inflation of 3%, which we had last year. So through price increases, we've succeeded in offsetting or compensating for cost increases. Now, where did we earn our EBITDA? In almost all European markets, our performance was better. The only disappointing market was the North American one, but we believe that the turnaround will come in 2012. The balance sheet structure, as was mentioned before, it's a strong balance sheet, a very low gearing, a net debt, even in absolute numbers, very low, and an equity ratio of 60%. Our cash flow from operating activities, that's good news. We didn't invest much in working capital, only 25 million, which is not a lot, considering how much more we produced. Normal capex increased over 2010. Disinvestment and other, we're at 65 million. That is the positive effect of the additional payment we got for the Tondach-Bramag swap. Growth investments, 56 million. Dividend share buyback and hybrid coupon, minus 62 million. So what remains for the full year is a net cash flow of 22.8 million, which is a good performance considering the environment of the year. Working capital, that's a topic both externally and internally. We wanted to reach 25% working capital in percent of sales. In 2011, we were at 24.2%. We were able to increase our inventory by no more than 7%, and you need to compare that with an increase in revenue by 14%, and the 7% include a 6% consolidation effect. So from our current business, we only increased inventories by 2%. Days sales outstanding remained stable at last year's level, 25 days. Total investments, 160 million, compared with 150 million in 2010. Our total investments are significantly below capex, and 45 million were invested in new technology and new production equipment, as Hans Windisch explained. Growth investments in Belgium, we bought a Steinzeug plant. Tondach plays a role here, and we placed solar panels in Italy and Germany in order to achieve a better result as far as our electricity costs are concerned. The development of net debt. 375 million at the end of 2010, 204 million gross cash flow, 158.8 million were spent for total investments, working capital and others, 16 million. We have a consolidation effect because Tondach was included in the consolidation with its debt. That means an additional 75 million debt disinvestment. That is the one-off effect I mentioned earlier. Dividend, 10 million, hybrid coupon, 32 million, share buyback, 20 million. So, as you know, in 2011 we placed a bond, we issued a bond for 100 million. At the beginning of 2012, we placed another bond issue, 200 million in the Benelux countries and Austria. The total being 200 million. Demand was strong. The coupon is 5% and the term 3.5 years. The proceeds from the bond issue will be used primarily for maintaining and strengthening our capital structure, and part of that will also go into our current business. One thing is clear. We go to the capital market in order to obtain funding, and we will continue doing that in smaller tranches. Our liquidity and term structure is balanced. If you include the 200 million bond issue, this adds up to 400 million in cash, which is more than enough for the maturities in 2012 and 2013, and to pay for the acquisition of Pipelife. The next maturity coming up is 2014, and in 2015, if I add the 200 million, 217, the hybrid bond will mature, but it's 5 years from now, and that's quite a long period. But we do have debt with maturities up to 2018, so we have a very balanced term structure. The covenants, we have enough headroom as far as the covenants are concerned. We could even increase our net debt to 3.5 times EBITDA. So we are very well placed there, and our clear objective is not to go beyond 2.5 times in terms of net debt as a percentage of operating EBITDA by the end of the year. The share buyback between August and November 2011, why so long? Well, we're not allowed to influence prices. We bought back 2% of the share capital at an average price of 8.8. The capital requirement was 20.8 million. The primary purpose of these shares is to be used as currency for transactions, if any come up and are value creating. That's all as far as I'm concerned.
Thank you very much, Hans and Willy. Ladies and gentlemen, there are 2 items on the agenda that are left for me: shares and dividends and outlook. As you know, Wienerberger is committed to transparency. Through our reports, we are committed to corporate governance, the governance code in Austria, as well as on an international level. As a result of our international shareholder structure, we are a very transparent, open company. We have a very stringent risk management system. All managers are taking part in annual risk evaluations, and proper measures are taken. We have an internal audit system, a group of people who directly report to the managing board are conducting internal audits regularly, and together with the audit committee, they decide where action needs to be taken, and they regularly report to the managing board and the supervisory board. So regarding corporate governance, we are committed to be a pioneer, and we also hope to communicate with you in a fair and open manner. Next, development of shares. In the course of this year, we managed to outperform our peers in Europe. Our performance was better, and we were also better in terms of the ATX. Now, we on the managing board are not yet satisfied with our performance, and together we will work hard to improve our performance. But then you need to bear in mind that capital movements on the Vienna stock market are restricted. So our performance this year was good. Regarding the dividend, which was already presented here, we see the dividend as a result of our business development, a plus of 20%. The dividend has been raised to 12 euro cent. Our goal was to make Wienerberger profitable again. We succeeded, and we also managed to pay out a dividend, even though it is not very high. However, we will continue our dividend policy in line with the development of our business. The ex-day is the 15th of May, and the first day of payment will be May 18th. This takes me to the outlook. The first quarter, of course, was characterized by the fact that we had a very cold February. Austria was also affected by these weather conditions. Eastern Europe suffered mostly. Poland had temperatures of up to below 40 degrees centigrade. This, of course, meant that some of plants could become operative only later. We wanted to make use of savings potentials, and the plants that were running, of course, used up more energy on account of the low temperatures. This had an impact on our results, on the one hand, and also there was little construction activity going on during that time period, and many projects could not be completed owing to frost. The Tondach and Semmelrock business was also influenced negatively by the weather, so they were off to a weak start. However, Pipelife was off to a good start in 2012, and the results in the first quarter were very positive. When we look at the results, ladies and gentlemen, you can see that we managed to increase prices. Price increases have been accepted by the markets. Therefore, revenues are down by 3% only. Because of the bad weather, there were longer standstill periods, but this is going to improve over the course of the year. And North America had no extreme winter temperatures. Weather conditions were better owing to this mild weather, and this had a positive impact on our business activities. So these are the two messages that I would like to leave with you. Visibility, as I've already indicated, is low. There are still a number of open questions, sovereign debt, uncertainties. The Netherlands, an important market for us, have a government crisis. There are no clear-cut goals regarding new construction subsidies or write-offs for renovation. All these factors, of course, impact our business activity. We try to be flexible and adjust our activities. Investments will be confined to a minimum. Normal CapEx will be below 60% of depreciation. Regarding growth investments, we have made it clear that with the takeover of Pipelife, we have taken a very important step. We want to focus on consolidating the company. And once again, we are focused on operational excellence. And we want to improve our product range by offering complete solutions, system solutions. So as I've indicated, by way of introduction, we want to outperform our peers once again. Medium-term goals, and we are talking about 3 to 5 years. The Wienerberger management will focus on cost management. We are dependent on energy, and therefore we need to improve in this regard. We also need to improve our performance. We will focus on organic growth. Willy van Riet has shown you that we've had 9% organic growth last year, and we want to continue this trend. We also place great emphasis on marketing and distribution. We want to integrate Pipelife. We want to make increasing use of synergies wherever possible. And as Mr. Windisch pointed out, we also want to make use of growth opportunities outside of Europe, in Russia, in India. Because, as I've outlined, the new construction segment in Europe is fairly weak. So the message is clear: growth in the areas where we are strong, and also in those countries where we see future potential. So, after all these measures that were taken in the last 2 years, Wienerberger is well prepared for the future. We have a sound basis. We don't need to make huge investments because of this strong operational basis. We have operational excellence. We focus on companies that permit sustainable profitability. And, as you've seen, we also focus on innovation. And this is not only true for top management, it applies to all our employees. So, we are confident that with the support of the markets, and as pilots would say, we need tailwind, of course. So with the support of the market, politics, we are confident that we will achieve an EBITDA of more than 570 million in 2015. So we continue our growth policy, but of course we need the tailwind from the markets. Thank you very much for your attention, and I suggest that we move on to questions from the audience. Ladies and gentlemen, you now have the opportunity to ask questions. First of all, Mr. Staller. Voting cards 73, 74, 75.
Ja, meine Damen und Herren,
Ladies and gentlemen, good afternoon. Members of the board, members of the supervisory board, ladies and gentlemen, my thanks go to all the many employees who have been doing a good job. I'm not so sure about whether the management board has also done such a good job. Mr. Scheuch sometimes interrupts the chairman of the supervisory board to explain things. So maybe this indicates that he doesn't believe that the supervisory board. Mr. van Riet, I think we pray every day that our roof tile business will not suffer. I think the atmosphere here is a bit pessimistic. This is my impression. So we need to confess. We need to make a confession. I looked at the annual report and it says Wienerberger is no longer what it used to be. I wondered, what does that mean? Is it the performance minus 51% in 2011? Mr. Scheuch, I don't think it's quite correct to talk about the performance in 2012. We are talking about 2011. And stock prices have gone down by 50%. You will not reach the figures of 2006 and 2007 for a long time. Shareholders have lost money. The dividend is not something that we've deserved. It actually is deceptive. Ladies and gentlemen, let's take a look at who has not lost anything. When you look at the report, page 33, you will find Mr. Nograsek, member of the supervisory board. His remuneration increased by 399% from 16,279 to 65,000 euros. Who else hasn't lost anything? Supervisory board remunerations have tripled. They rose by almost 289%. 224%, that's the figure that the payment for the management board have gone up. Well, you've talked about performance, Mr. Scheuch, but there was no success. Last year, and let me make it clear, last year your salaries were increased significantly. The members of the supervisory board, the remuneration of the supervisory report has gone up. And the reason you gave was you want to make it more international. But where are the international mandates, members? Remuneration includes fixed and variable elements. Variable elements are particularly linked with sustainable long-term results or criteria. So I quote from your report, the only criteria are EBITDA goals for the coming year. This has nothing to do with long-term development, with sustainability, and nothing to do with good corporate governance. On the 14th December 2011, you had a meeting. You gave a Christmas present to the shareholders. At the end of the year, the budget, in my opinion, had been completed. You set new goals for 2012. This is not the way to proceed, gentlemen. It's not sufficient. So we had a veritable explosion of salaries of the management board members. What were the EBITDA goals actually for 2011? And I'm now referring to the meeting of 14th December. Page 35 of the business report. Mr. van Riet, you talk about a loss of investment grade rating due to the crisis. 5% for 3.5 years. And you said that this downgrading was not decisive. Well, Starbucks has 7 years, 5%, and they have been downgraded. So, Mr. van Riet, what will you be doing in order to achieve a good investment grade rating again? Another question. Or don't you care about the rating, even if we have to pay higher interest rates? So I would say the success, or rather the performance by Mr. Scheuch is something I don't want to belittle. But ever since August 29, we have had a continuous restructuring program. You said it has been completed, but this is not true. The only thing that you have restructured are the salaries of the management board and the supervisory board. We cannot live on the basis of EBITDA. This is not possible. Our EBIT in 2009 was 19 million, in more than 10 million in 2010, and in 11, 48.5 million. So we have normal capex far below depreciation. This worries me. Mr. van Riet, doesn't it worry you as well? On page 63, you say the dividend will depend on the future market developments. I think the report was published at the end of March. Weren't you sure as to whether between then and now you could actually pay out this dividend? Or what does this sentence in your report mean? This is something I'd like to get answers to very briefly. Well, net gearing, ladies and gentlemen, in 2010 rose from 374 to 445 million. Let's be quite clear. You are getting a dividend actually on the basis of debts. The result is profitable only because of Bramag. I think we can call that a windfall profit. Mr. Scheuch, I would prefer you to say restructuring is not complete yet, and it won't be complete for a long time. And my intention to make profits and to pay out a dividend has failed. These 12 cents actually are a fraud. Purchase of shares, 18.20 million. This is nonsense. We don't have the money. We had to increase our debt. When you compare this with EBIT, Mr. van Riet, you as the CFO should really be worried. What do we need these funds for? For what M&A projects? Next, cash flow. Page 77. True, cash flow has improved. Cash flow from operations. But as shareholders, this is not something we are interested in. Free cash flow is the only thing that interests us. Free cash flow means, can we pay out a dividend? Can we repay our debts? This is what matters for us, Mr. van Riet. What about the development of free cash flow? If you ignore other effects, Bramag, etc., this difference of 65 million to 43 million, I would like to get an explanation for what is included under others. We have free cash flow of 141 million. If you take out Bramag, it goes down by 50%. 2 years ago, the free cash flow went down by 2/3. So what are you doing in order to improve things, gentlemen? The free cash flow indicates the health of our company. When Mr. Scheuch says that we are strongly positioned, I wonder whether this is true. I'm really worried. Page 64. You talk about a reward for the creative story of our investment story. Well, your annual report makes good reading. It's well presented. It looks extremely good. But when you talk about a creative storytelling, Mr. van Riet, I'm getting worried, because a CFO should not view things in a creative manner. On page 79, you say, our goal is to create value. This is the only thing that should be taken as a parameter. We are talking about Wienerberger value management. I'll try to make complicated things simple. We're talking about CFOI, ROCE, and EVA. You may remember, Mr. Schachel, actually it's only about ROCE and EVA, creating values. Take a look at pages 80 and 81. Ladies and gentlemen, the CFROI is nothing but EBITDA as compared with capital employed, the historical term. We introduced a number of hurdles, 11.5%. This is competitive. And actually, we have reached only 5.2%. This is far from the goals that we have set ourselves. So the same holds true for CFA and other parameters. Or let's take a look at ROCE and EVA. ROCE is the net profit on capital used. You don't want to hear the result. It's 1.1% only. Last year, well, we stood at 0.2%. We are not really earning anything from the capital that we invest. When we look at economic value added, well, let's take a look at the values created. We have weighted capital cost 6.89% and ROCE 1.1%. So when you compare this with capital employed, an enormous amount of almost 2.8 billion, you will get a negative result of 136.9 million euros. So in the last 2 years, a total of 346.3 million of euros was lost. This is the value that was lost. I'm talking about the hurdle rate and our goals. And in this regard, 696.5 million were lost. Is this what you call creative, Mr. van Riet? I'd like to have an answer to that. Management failed to reach the goals that it set for itself. And in order to camouflage this, the supervisory board sets bonus goals or has agreed to pay out a bonus for a performance which I consider inferior. Congratulations on your high salaries, but you haven't earned them yet. The dividend is nothing but a panacea in order to pacify shareholders. But don't think we are stupid. You might forget paying out a dividend. This might be an argument not to serve the interest rate on your hybrid bond. You would have to do that if there's buyback of shares. I don't think we should be getting a dividend. We don't have to get a dividend. Where was the hybrid bond placed? Which banks own these hybrid bonds that have an interest rate of 6.5%? We only have interest rate of 1.1%. A few more questions. On page 94, there is a book value of 68 million for real estate or property that is not used. On 94, you mentioned change of control clauses. What clauses are you referring to? On page 104, there's something I don't fully understand. We have a euro loan from what bank? The book value and market values differ. Why, Mr. van Riet? I can imagine that there are slight differences. For 5.4%, a difference. This is something I don't understand. Maybe you can answer my questions. Pipe life. Basically, it's true that we need to diversify. We have ceramic pipes. We now produce plastic pipes. What synergies do you expect to get? You didn't mention that. What are your goals for EBITDA? Why am I asking these questions, ladies and gentlemen? Our EBITDA margin is 12.8%. We get another 800 million revenue with 17 million EBITDA. That's a margin of 8.7%. We are diluting, actually, our profitability by this acquisition. So I'd like to hear from you, Mr. Scheich, enterprise value pipeline. Purchase multiple on EBITDA basis, not just for 2011, but also for 2009, 2010, and 2011. We've consolidated at equity, so what was the EBITDA? You never said anything about the treasury stock, the own equity capital, sorry. I remember an article where you mentioned a slight net debt, but no details, nothing.
Die machen mir nach wie vor Sorgen. Ich kann mir ein
Mr. Knapp is going to say something about goodwill impairment, which worries me a lot, but I can't imagine that with a state-of-the-art sensitivity analysis, you should have a drop by 9% in the United States, and you shouldn't see a need for impairment there. I have doubts about that, so I hope you can clear up that through the answer to your question. Page 121, we closed plants. Now what do we have? We have a problem of transport costs. Transport costs increased by 26%, revenue only by 16%. What do you do against that? How do you counteract that? A positive thing is the women's ratio, which is being addressed in the annual report. 3 out of 23 or 26 top executives are women. Now, you have many questions to answer. Mr. Heidel is going to step down because of the age limit from the supervisory board. I'm sorry to see that. I'm sorry to see you go, Mr. Heidel.
So, ich darf einmal.
So, the questions that concern the managing board and the supervisory board will be answered first. Then I will ask the next speaker and prepare to give us time to prepare answers to your very detailed questions. First, the managing board. There are decisions, targets are set up for every year at the beginning of the year. For 2011, I can give you the following targets: a bonus of 0% of the fixed salary with 200 million EBITDA and 200% if 300 million are reached. For 2012, the values are significantly higher, but I'm not allowed to give you any guidance on that. I'm not allowed to mention these values. I'd like to point out to the shareholders that in 2010, we had a bonus of 0 for the managing board. The supervisory board and the personnel committee of the supervisory board discussed not only the long-term incentive, discussed a possibility of intensifying the long-term incentive program. This is what we did. The rest is a pure calculation exercise. The results are published. The second point you mentioned concerning the supervisory board, it's not the supervisory board itself that takes these decisions. Last year, we asked the AGM about a complete restructuring of supervisory board remuneration, and that's the result of it. We did restructure completely. the basic remuneration is kept very low, and for the working sessions, an incentive has been created in the form of a higher meeting fee. You will see that when you look at Mr. Nograsek's remuneration, for example. The audit committee met several times. You didn't mention that one person only got 40% in Mr. Nograsek's case. The restructuring of the system, which you approved last year, has had a stronger effect. Well, you may have voted against that, but the majority was in favor. Sorry, there's a comment from the audience without a microphone. Well, not everybody present can't have voted against it. There was a majority of those present and represented. So it's not ourselves who determines these figures, who sets these figures. We're not keeping anything secret. Everything is completely transparent. It was reported last year and it was approved. That is the result, as outlined in the annual report. Now we move on to the next question. Mr. Diedrich, Johann Diedrich, would like to put his question himself. Would you please come to the rostrum? Good morning. Well, I haven't stolen my money. I bought some shares and I thought I'd get rich. But these shares make me poor rather than rich. And I wonder, how can I invest my money to make a profit? Had I taken the money to the bank and put it on a savings account, I would have got much more out of it than in your case. I made a loss. It's not just that I didn't make a profit, I made a loss. And why should a managing board earn so much? Why do we need so many members of the managing board that there is nothing left over for me? One could cut the remuneration for the managing board. One could reduce the number of people on the managing board. Perhaps you would be more active then, because for the time being I can't see any activity on the part of the managing board. There's each of you sitting on his chair, getting a lot of money, but what's being done for us? So when I invest my money, I want to get something out of it. But if I never get anything out of it, if I need to be worried whether I'm going to get anything back at all, I really start wondering, why do I have a managing board? A managing board has to produce a profit for me. But if I have a managing board that is only loss-making, I wonder, why should I have such a managing board? What I need is a managing board that works for my own goals. Perhaps the managing board should get 50% less or even 75% less. What is the salary of the lowest paid worker in the company? Shareholders want a dividend. We want our money to get more and not less. Because if my wealth doesn't increase when it's invested here, I'd rather take my money to the bank. I want to see results. because otherwise I'll be left with no money in the end. Do you have a question? Says the chairman. No, I'm finished. Thank you very much. I may make a couple of corrections, though. We have a positive result and not a loss this year. Well, read the annual report. Mr. Knapp is the next speaker. We have a request for the floor from Mr. Knapp. Mr. Chairman, ladies and gentlemen, I asked to be the first speaker because I have a meeting at Wienerberger at 2 o'clock. I will have to leave you in 5 minutes. I love listening to Mr. Staller. He's an excellent speaker and a great expert. But it would be not very polite if I were to put 8 or 10 questions and then leave before I can hear the answers. So I will withdraw my questions, and I will only put the one question already announced by Mr. Staller about goodwill impairment, 2.6 million. That is the goodwill impairment of the Serbian entity. That's okay. One thing that worries me is 613 million goodwill, which is still on the books, but it's not goodwill, it's air. It's nothing but air, which means that we paid too much for the companies, and their goodwill is their value, the enterprise value is 313 million less, and that worries me. I'm referring to page 128 and 29. You're referring to a sensitivity analysis which you had done, and that resulted in an impairment charge of 25 million. In my opinion, this only serves to pacify us, to tell us that our goodwill problem is not that acute. But when we look at the United States and Canada and the sluggish business there, we have goodwill on our books there of 165 million for General Shale and 12 million for the Canadian participation in Ariscraft. So if you look at the sluggish business there, we will have to impair our goodwill in the United States. We will have to book an impairment charge, and I wonder how much that impairment charge is going to be if our United States business doesn't pick up. Sorry for having to be so brief. I'm not offended. I had asked to be the first speaker, but unfortunately my request was not met. I don't know what I did wrong to deserve this punishment. Could we answer Mr. Knapp's questions first? So, Willy, would you take the first question, please? When you look at the possibility of impairment, you don't only look at goodwill, but also at fixed assets, inventories, plus goodwill of a company. And then you look at the expected payment flows in the future. We used parameters such as what is the risk involved in the business, and we engage in long-term planning, and we looked at the expected level of new housing starts in the US, and the book values of fixed assets are very low. You always have to look at both in combination, goodwill and fixed assets. So I move on to answer Mr. Staller's question. Thank you, Mr. Staller, for your comments, which covered a huge variety of topics. We, as the managing board of Wienerberger, are very transparent. We are matter of fact in our presentation. We present information to all shareholders, and I'd like to conduct our conversation in this on this note. What we need is not populism, but an honest and sincere way of dealing with each other. That's what I would prefer. Well, you said we are on weak legs. You sounded very gloomy. But let me present the facts of the company. We took over in August 2009 in a very difficult phase. The company was loss-making at that time, and the managing board and thousands of employees together managed the turnaround. The company is back in the profit zone. We are making profits, but these are not windfall profits. When you look at the balance sheet and the income statement, you will see that it's our operating activities that generate the profit. Of course, it's being improved through one-off effects, which we disclosed very clearly, and we kept underlining that these are one-off effects. We've repositioned the company. Please bear that in mind and take note of that. The restructuring process we went through was a unique process. We had to shut down many sites. We had to reduce our headcounts. That was a one-off thing, a non-recurrent restructuring process. And I said very clearly today, we are in a cyclical business. We are dependent on market developments. Again and again, you will be seeing measures taken in Wienerberger that are due to market developments. If we have production downtimes, if we step up our production, all that is related to the market. We can't dissociate ourselves from the market. We have to develop in line with the markets. And in the markets we operate in, we outperformed others. We weren't dormant. The managing board was working hard together with everybody else in the company, and we created the essential basis for the future. We initiated optimization procedures. We restructured Wienerberger's portfolio, and we're back on a growth path. Our self-set targets are very ambitious. I'm fully aware of that. We have set ourselves such ambitious targets because we want to reach them. We want to address this challenge. It's going to be very difficult in this year's market environment, which even you will concede. So we are on the right path. I'm sure you're going to tell me that we're only taking small steps. Yes, it's small steps, but bigger steps. We are taking bigger steps than would actually be possible in a market like this. We have already managed the turnaround. The company is no longer loss-making but profit-making, and that should not be forgotten. The company today is much more dynamic, much more cost-conscious and cost-aware than it was a couple of years ago. You put a large number of detailed questions. Well, let me tell you one thing. We're not creative in the financial sphere. On the contrary, we're very conservative there, as our low level of net debt shows. The increase you referred to is due to the first-time consolidation of the Tondach Group, as Mr. van Riet said. Almost 75 million of liabilities of Tondach had to be included in our balance sheet. The hybrid bond you mentioned is held internationally by a large group of investors, not just in Austria, but they're all over Europe and the United States. A huge number of investors that are not being disclosed, institutional investors and private investors. Back to Pipelife. Pipelife, and I'd like to thank you for your comment. It's a step in the right direction because it diversifies our portfolio. It allows us to be active in renovation, in water management. It's a good and a profitable company. Mr. Staller, it's not just a question of EBITDA and the EBITDA margin. Yes, across the group, we're around 12% with our EBITDA margin. Pipelife has a lower EBITDA margin at 8%. The capital intensity of that business is completely different than in brick making. A site, a brick plant costs 40 million. A pipe production plant costs 10 million. This is why the margin is lower, but we will succeed in increasing the margin of the Pipelife Group. If you look at it from a cyclical point of view, the Pipelife Group ought to have a margin of 12% under more or less normal economic conditions. During the crisis, we were around 8%, and the 70 million of Pipelife were quite stable throughout the group. Of course, there was the one-off burden of the depreciation and the closure of the activities in Spain and Portugal, but they've recovered from that, and in the first quarter I can see a satisfactory development of business. The multiple of the purchase price, which was communicated very clearly anyway, also as far as the level of debt is concerned, is just under 6. So we had an enterprise value of just under 6 times EBITDA. I know what you mean. But let me finish. As far as the purchase price is concerned, it's just under 6 times EBITDA. I'd like to hand over to Willy van Riet. You asked about the euro loan. This is a loan with a term until 2015 at a lower interest value. The market value increases. The book value of real estate, 117 million. That is on page 129 of the business report. We're not creative everywhere. You compared us with Strabag. Well, you can compare us or benchmark us against any company. Heidelberg Cement, Lafarge, they are slightly bigger than we are. And you also know that there is a high degree of volatility at the financial markets. The environment changes from week to week. It depends on how you can place your issues. Well, Strabag still has investment grade. They have a huge cash pool, and their environment is different. We floated a bond earlier. We got a bigger amount. We placed a bond in 2011, and that shows very well that you need to be well prepared. As regards the share buyback, you refer to a rising net debt. Now, I think that the increase is due to the consolidation of Tondach and nothing else. CFROI, we think, and we present that very clearly, we present that very clearly. So CFROI is part of our remuneration component within the framework of the long-term incentive program, as provided for in the corporate governance code. You mentioned the change of control clause on the managing board. I can reassure you there is no golden handshake for us. We can terminate our contracts 6 months after the change of control, but no monetary advantages for managing board members. Another speaker also mentioned the managing board. Well, I may remind you that in 2009 the managing board was reduced from 4 to 3, and the 3 of us are managing a much bigger business than before 2009 when we were 4. All the remaining questions are being checked and will be answered later. Next question. I was asked to read out the question from Mr. Monk, voting card 425. The question is, why was the managing board remuneration increased by 125% between 2010 and 11? Well, the results are positive. I already gave you the criteria for management remuneration, for the variable component of management remuneration. The increase is almost entirely due to variable remuneration because no bonus was paid out in 2010. Next question. Mr. Vanko. I've been asked to read out the question. What's the women's ratio among executives in the company? The percentage of women has increased from 5% to 10% in the Wienerberger top management. So we have made an effort to increase the percentage of women in a highly male-dominated sector like the building materials industry. Mr. Weber, the next question. Congratulations on Pipelife. Are you diversifying into concrete slabs? Are you intending to participate in the infrastructure market bituminous pavings? Are you thinking about steel framework buildings, etc.? Well, thank you very much. Yes, it's been an important step to integrate Pipelife into Wienerberger because this gives us a strong second pillar to rest on, and I'm sure it'll show a satisfactory development in the future. As far as pavers, semi-rock pavers are concerned, yes, we've been expanding this business. Our production capacity was increased in Romania and in Poland last year. We are gradually gaining market shares there, and we intend to continue along these lines step by step with concrete pavers. As regards, now, for the time being, we've integrated Pipelife. We've taken growth-oriented steps. We're going to focus on that, but we keep our eyes open for future developments, and we may also consider other topics in the future. Well, I'm trying to answer Mr. Stahler's questions one by one. He asked one regarding our investment activities. We have a good network of plants, very modern, advanced plants. We invested a lot in 2000 and subsequent years in our sites, and it's absolutely not necessary. It's no problem for us if we invest 60% of our depreciation. These are not only maintenance capex, but also investments in energy-saving measures. So you may rest assured, Mr. Schaller, that our network of plants is an excellent one and does not suffer from inadequate capex activities. You had a question about transport costs. It will be answered by Mr. Windisch. As regards transport costs, they have increased by 22%, increase in revenues by 16%, a very simple calculation. The average price increase is 2 to 3%, so what remains is an increase in volume of between 12 and 14%. And the difference is 10%. When you look at fuel prices over the past year, this accounts for this difference very well. I can't give you the detailed figures, but you may be assured that our plant network is such that we do not suffer from new transport cost problems.
There's one more thing, Mr. Stahler. You asked about the multiples, Pipelife multiples, and I said 6 times, and for 2009 it would have been 6 times 6. And in the year of depreciation, and you have to bear in mind that we closed down plants in Spain and Portugal, it would have been 7 times. Mr. van Riet will give you the details. Well, we planned to take over Pipelife, and we publicly stated that we will have an investors' conference. All the shareholders will be invited. This meeting is going to take place in Vienna in September. You're cordially invited. Everyone present here can attend this meeting. And we will make all this public. There's something else that you need to bear in mind. We have signed an agreement with Solvay, our former partner, and we said that before closing we will only make a limited amount of information public, but after the closing we will make everything public. Sorry, we cannot hear the statement from the audience. Our equity is 100 million. 100 million for half, for 50%. And This is what you can actually glean from the balance sheet. Sorry, no microphone.
Nein, überhaupt nicht, überhaupt nicht. So, wir kommen zu der nächsten.
This takes us to the next question, Mr. Roland Heilig. He refers to the supervisory board remuneration, 176,000 and 515,000 for 2011. When do you plan another increase of the remuneration for the supervisory board? I've already answered part of this question, but I can answer the final part of your question. There are no motions to increase the remuneration for the supervisory board. Next year, at the next AGM, the overall amount will certainly be lower because instead of 9, we will only have 8 members on the supervisory board. Next question. Mr. Farscher, 902. Would you please proceed to the rostrum?
Der hat jetzt viel da. Wollen Sie es haben da? Ja, danke. Da. 1, 2, 3.
Ja, sehr geehrte Damen und Herren, war schon länger nicht.
Ladies and gentlemen, it's been quite some time since I've attended an AGM as someone who has been a shareholder in Wienerberger for many years. My first question is a simple one. Part of the answer is given in your report. What is the average interest rates on liabilities? And maybe you can break it down into short-term and long-term loans. 4.4, 4.5% without the hybrid, and including the hybrid, 5%. I couldn't give you the difference between short-term and long-term loans. Most of, practically all our loans are long-term loans. What is the present interest rates for loans, if you want to take out a loan? Well, 5% was the interest rate for our most recent bond, 3 years maturity. Well, Germany is in a different category. Well, we are not in Germany. I think the difference is considerable. Nothing much has changed, and nothing much is going to change. No. Mr. Scheuch, you said you took out 50 sites. How many were shut down altogether, and how many have just been mothballed? I talked about the 50 in the time period 2008, 9, 10, and 11. These are sites that were closed down, shut down completely. Do you plan to close down additional sites? No. Maybe I could add a remark. We have mothballed 20 locations, 20 sites. And mothballed means they are not operational right now, but we can start operation again at any moment. So this would be over and above the 50 that were shut down, yes. Are all the restructuring costs already shown in the balance sheet? When it comes to shut down and mothballed plants, yes, this has been taken into consideration. We have a depreciation for the mothballed plants. There are no ongoing costs, no. we make sure that nobody can enter the plant and remove equipment, so the only costs stem from supervision and control of the plants. Your outlook was a positive one. You said that people will have to build homes and that the outlook altogether is positive. Now, my question in this regard is whether you have also considered a different scenario. There is a considerable amount of private and sovereign debt. So it may be that no building activity can be afforded in the future, neither by the private nor by the public sector. In how far are you prepared for a worldwide economic crisis? Is there a plan B? Well, we do not just draw up a budget once a year. We have continuous forecasts. We adjust to the forecasts in individual countries regularly. So if necessary, we can shut down plants, reduce production in some countries. I've shown you our planning model for supply chain management. So we have actually considered this. My assumption is that in view of the difficult economic situation, the huge sovereign crisis, the high unemployment rates, we will be facing difficult times. But there is a demand for social housing, there will be building activities, there is a need for houses, not just in Eastern Europe, but also in Western Europe and in North America. So I assume that there will be changes in the coming years. To answer your question, yes, we are prepared for whatever comes up. Looking back over a longer time period, my next question is the following. Why has the profit structure of Wienerberger changed so much? In 2006, we had a result per share of 2.95 per share. In 2007, 3.6 euros. In 2008, 0.81 euros. And now we stand by 0.08. Can you explain this? Despite the fact that Wienerberger always maintained that they take action in time. How come that there was this enormous decrease in profit? There are two reasons. First, in 2009 and 2010, we had to carry out a capital increase to strengthen our financial position. And this, of course, dilutes the profit per share. When you look at the period 2006 until now, all the markets showed a decrease of 30 to 40% on the average. And the combination of these two factors is the explanation. And what about the coming years? Will be remaining at this level? Well, our medium-term goals show that we hope to be able to improve our profitability, and this will, of course, impact the profit per share. Then I have a few more detailed questions. Dry fix. Authorization in Germany. You mentioned difficulties. Is this glue free from harmful substances? Well, the difficulties in Germany that Mr. Windisch referred to simply meant that it takes longer in Germany to get permits. There are no problems. It's just a matter of time. The permit has been given, and there are no problems with the materials, no. What type of bricks are being produced in India? So-called longitudinal hollow bricks. You may know these from the Mediterranean countries, where you use longitudinal hollow bricks. And they are used in earthquake regions where the basic structure is steel. And are these products only suited for the Indian or Asian markets? Well, the products have been specifically developed for the Indian market. It's a product innovation. Usually they have only handmade bricks of lower quality, and the advantage of our bricks is that they can be that they reduce construction time, and also they are lighter than concrete. What growth rates do you expect for the coming years? For Wienerberger at large, or for the Indian market? Well, the Indian brick market is a huge market, and we have only one plant in India. So I really couldn't give you any concrete figures. As Mr. Windisch pointed out, we want to achieve full utilization of this one plant near Bangalore and increase capacities with as low a capex as possible. And then we want to grow step by step. Just let me give you an idea. We need about 2 years a lead time to start up a plant. You need approvals, permits, you need to test local materials, you need to develop the infrastructure. If we want to continue to grow in India, we need to do this ourselves. There's no company that we could purchase or take over. And in southern India, well, we have a good management and we want to grow there. Well, you mentioned product innovation. Growth actually should come automatically. Do you have full utilization of the plant? Yes, we do. And an internal question, if I can put it like this, you mentioned governance, internal audit. I hope that you have an internal audit system, an internal control system in all your business areas that is subject to internal audits. Yes, we do. Thank you very much. And the auditor also checks that. This takes us to the next question. Mr. Rasinger, voting card 716. What is the y-axis in slide 6 in the report? What does the y-axis stand for? Well, let me answer this question. It's the development of the market volume, and the blue line and the red line shows our development. We are thinking in terms of 5% steps, 7% for France, and this makes it possible for you to deduce growth also for the other countries. Why didn't we, why haven't we been more precise here? Well, we show figures for all the segments, no breakdown for individual segments. So these are, well, rough figures, more or less. Thank you very much. I will read 2 more brief questions, and then Mr. Berger has the floor. One question from Mr. Weber, 848. Why didn't you change your product range instead of closing down plants? And question number 2. President Obama reduces the unemployment rate from 10 to 6%. And why haven't you mentioned Brazil? Well, let me answer. Brazil is a beautiful country. We tested this market. The Brazilian brick industry is highly fragmented. There are many family companies, family-owned companies, and also there is a considerable black or grey market, so it's not really suited for an international company. You mentioned President Obama and his initiative to reduce the unemployment rate. Again, this is just my personal opinion. Infrastructure measures are one thing, but here we are talking about equipment, machines, products. We, as a company, and with our portfolio, we are working in the new housing segment, renovation, and with Pipelife, we also have a foot in the area of water management. We want to expand that. There are many suppliers in the United States, Lafarge and others, big companies. There is considerable overcapacity in the cement and asphalt industry, so there's no point for us to enter that segment. We are now focusing on integrating Pipelife, on developing Pipelife, and then we will see whether we can establish an even broader base. Next, Mr. Fischer, 792. Why isn't the dividend tax-free, or freed from a capital tax for private investors? Well, we examined that, and given our shareholders, this is something we cannot really achieve, and we have no plans for the coming years. See, our shareholder structure is highly international. Sorry, we cannot hear the question. We have, sorry, no microphone. There's no need to get emotional, Mr. Staller. I'm saying that we have a shareholder structure that is international and mostly industrial, and that wouldn't make sense for them. Mr. Berger. And after you, Mr. Stockhandel. Shareholders, members of the board, many questions have already been answered, but permit me to make a few brief comments. Of course, I've also looked at the report, the annual report. It's very good indeed, but it says nothing about long-term perspectives. So I too feel that the variable portion of the managers' salaries should not have been increased that much. We should also bear in mind that, well, for 2 years, no variable salaries were paid out. Maybe there was a pent-up demand. But again, let me repeat. The 3 top managers of Oberbank, taken together, earn less than you do, Mr. Scheuch. I think considering that the market environment for Wienerberger is difficult, perhaps one should not really have paid out this bonus. So maybe you should bear in mind the long-term perspectives, and you should also mention something about them in the annual report. Next, the dividend. What matters to me is profit per share. We stand at 0.18 or 0.19. And paying out 12 cents, I think, is a problem. It means a diminution of substance. And I too feel that we can hardly afford this dividend. Mr. van Riet said, well, certain funds expect you paying out a dividend, otherwise they will sell their shares. But from an operational or economic point of view, what matters is the profit per share. So I need to have I need to make use of some reserves, and this certainly is not a good thing to do. Next question. What did you pay in terms of interest for the bonds and for the hybrid bond? I think we're paying more than we earn. And Wienerberger should increase the profit margin in the long run. But of course, this is difficult when you have two weak markets, Eastern Europe and the United States. As regards the United States, my question is, do you benefit from low gas prices? Gas prices are 2/3 less than in Europe. This would mean decreasing production costs in the United States, because gas, of course, is probably used for heating purposes. Do you use coal or gas? In the United States, if you still have coal-fired plants, you should switch over to gas-fired plants, because gas prices are down in the United States. And my next question. You referred to increasing energy prices plus 15 million euros, and you said that you could compensate for that by increasing prices. I'm sure this won't be possible in Eastern Europe. So, what are your plans for the future? You have quite a number of brick plants in Eastern Europe. You've renovated some of the plants in Hungary. Energy consumption went down by 20% and by 24% in Slovenia. So what are your plans for these two countries? Hungary was quite important for Wienerberger in the past few years. We visited some of the plants that, under Mr. Schaschel's management. So, what are your plans for the future? And what about financing? Will customers be standing a chance of getting funds? I mean, there's a pent-up demand when it comes to the construction sector, but financing is a problem. Now, is there any chance of customers there getting loans, or are there no loans available to people wishing to build a house. Next, Pipelife. The purchase price of 162 million. Of course, decreases your investment volume for this year. If you want to keep up the level of investments, you will have to incur higher debts. You mentioned that plants were closed down in Portugal and Spain. Are there any further plants, Pipelife plants, that will need to be shut down? And is the growth, are the growth rates that you've mentioned feasible, because there's a lot of competition in this sector? Next, India. India actually is a growth market. You have just a brick plant in India. I suggest that Steinzeug pipes would also be, or it would make sense to perhaps sell pipes in India, because they have considerable problems with the monsoon rains. The problem, of course, is that there are enormous tariffs, customs. So if you do not produce on the spot, you will suffer a loss. And of course, it would mean long distances. So what about your activities in India? Considering that you have only one plant in India, I mean, this is virtually nothing. So what are your plans for India for the next 10 years? Or let's say the next 5 years. After all, your business plan covers 5 years. So what are your plans for the future? What kind of capital will be needed? What funds are you thinking of? And you have to make sure to increase the profit margin. Lower production costs in the United States, therefore, might be another interesting factor. Thank you very much. Thank you, Mr. Berger. Let me take the 2 questions that were addressed to me. On the supervisory board, we have one principle. We don't want to set the bonus once the year is over. We made it clear in a decision in 2011, laying down the criteria for the paying out of a bonus. And I answered Mr. Staller's question. The parameter that matters is EBITDA. In 2009, it was 209 million, 210 million in 2010. And we consider this to be an important parameter for our company. So we said 0% bonus for 200 and up to 200% for an EBITDA of 300 million. I'm just trying to explain the motivation behind this system. If you call me crazy, well, I consider this to be offensive. Hindsight is always perfect. I've clearly stated the criteria for the paying of a bonus. So this answers your question, Mr. Berger. Sorry, no microphone. Well, I can't give you the criteria for 2012. This is not permissible. Professor Novotny probably will be able to answer the question whether we can do that or not. The long-term incentive, well, I explained those 2 years ago in great detail. We have a hurdle rate and a certain percentage that needs to be reached. Next, the question that was addressed to me as a member of UniCredit. Now, we are not at the AGM of UniCredit. The AGM of UniCredit is taking place in Rome, so you would have to raise the question there. However, there's one thing I can say. There are clear-cut criteria for the granting of loans in Eastern Europe, and regulations are country-specific. You will probably agree with me that Poland needs to be assessed differently than Hungary. Now, let me answer the questions that you raised. You mentioned India. 2 years ago, the managing board stated that we need to see whether activities in Russia and India are profitable. Today, we could show you that these are interesting investments that promise to be successful, and we want to continue. A new plant in India would cost about 20 to 25 million. So this means a considerable investment volume. As I tried to explain, we need to test raw materials, we need to make sure that there's sufficient infrastructure, etc., etc. And there's one thing you should not underestimate. It's not really cheap to invest even in emerging markets. This is what we've learned in Russia and India. As regards ceramic pipes, you're right, Mr. Berger, this is an interesting market. But as you rightly mentioned, it's important to produce on the spot. Import duties are prohibitively high. So this would not be sustainable. We export ceramic pipes into the Middle East countries and also into other overseas countries. But if you want to sell in India, you would have to produce on the spot. So you're right in what you said. Energy, when it comes to bricks, roof tiles and pavers, we use only gas-fired kilns in Europe, almost exclusively gas-fired kilns. We use a hedging strategy so that we purchase energy in advance. In the United States, and this is the only exception, we have coal-fired plants. Let me finish, please. And coal is still 10% less expensive than gas, even though gas prices in the United States are favorable. But coal still costs 10% less. Changing over to gas-fired plants would also require investments. We could actually do that, but as yet it would not be economical. You need to bear in mind that America is still a sizable coal producer, so coal is much cheaper than it is in other countries. And we have developed a special injection technology of coal dust. So we don't use coal, actually, for firing. We use coal dust. And this is cheaper and, to some extent, even better than gas. Next, I'd like to hand over to Willy van Riet, and he will talk about the costs of financing. You mentioned the issue of dividends. different shareholders have different interests. Some want a dividend, others don't. So we paid out a dividend, and in the future, of course, paying out a dividend will depend on market developments. We want to retain our capital structure. As regards financing, we feel that the dividend that we paid out is just a small dividend, and we feel that we can afford it. Financing at large, again, the speaker doesn't use a microphone, sorry. Well, we have the cash flow. Financing costs about 60 million for bonds, the interest on bonds, 32.5 million for the hybrid bond, which we show separately via the hybrid coupon. In 2012, you will have to add another 10 million and 5% for the bond. You also had a question regarding restructuring of Pipelife. No restructuring measures will be necessary. We have shut down the plants in Portugal and Spain. Pipelife has a very efficient structure, and there is considerable growth potential. Regarding the question of synergies, this is something that we will look at in greater detail. We will do that together with Pipelife. Topics like IT or administration, of course, will have to be taken into consideration. Distribution of products, of course, is something else where there will probably be no synergy. Once again, the dividend, I'm in favor of a dividend policy, and I made that quite clear. Mr. Staller, well, you are speaking for yourself, but as you know, we have more than 40% of our shareholders in the United States. They are institutional shareholders, and they view the paying out of a dividend positively. So let those shareholders speak for themselves. Mr. Staller, our shareholders, they are satisfied, very satisfied with our dividend policy. Next, Mr. Stockhansel. And then, once again, Mr. Staller.
Ja. Bitte?
2 Millionen.
So, Herr Stockhandel.
Mr. Stockhandel, and then Mr. Staller once again. Good afternoon. So there is a question without a microphone. Well, if Eastern Europe has gone down that much, the bad debts must be higher than 2 million. We'll check that. Well, we've managed that in a very conservative way. We are aware of the problem in the market. It is 2 million, so please take note of that. So, good afternoon. I welcome everybody in the room, the representatives of the owners and those in the room who pay us. I hope you're not going to fall asleep while I speak. Let me make one thing clear. I would never say the managing board or the supervisory board are crazy. Well, we're talking about facts. But the supervisory board and the managing board are clever, which says quite a lot. You promised us a share in rising income. So if the dividend were to increase from 12 to 14 cents last year, you would certainly call that a great success. And that would enable you to get a higher bonus, to justify a higher bonus. You said that you are matter of fact and down to earth in your way of dealing with things. Well, but nevertheless, I find statements in your annual report which would be better placed in the advertising brochure of a do-it-yourself market. Well, we heard from a shareholder in EVN, an Austrian utility, who was also complaining about share values going down. Well, I tend to take a long-term approach. Among my shares, there are some that I've held since 1990, but I'm still underwater with these. Now, I've looked at the business year 2007, 8, 9, 10, and 11. I've looked at managing board remuneration, 14.8 million altogether. Dividends distributed to the owners, 146.3 million. 14.8 times 6. That means the managing board earned a tenth of what was paid out to the shareholders in 5 years. That's not bad, because I remember a company where the managing board got about 5 times as much as the shareholders. I also looked at the costs of borrowed capital. Over the past 5 years, 470 million. So we would have to, you would have to be a bank to earn a lot of money, as I can see. And then I looked at taxes paid. About 84 million. So the managing board makes sure that we all get what we deserve and that the state get what it deserves. In 2010 and 11, the managing board got 5.9 16 million. 28.8 million for the shareholders. That is, the managing board got about 1/5 of what the shareholders got. So rather modest, not super modest, but still. And the bankers got 173.3 million in terms of interest. And taxes amounted to 13.8 million. But you have to be honest. The Minister of Finance also gets money from the shareholders in terms of withholding tax. If the money stays in Austria, but summarizing, in 2 years you got 1/5 of what the shareholders got. And those who borrowed you money were best off.
Also wenn ich das Wort Gewinn heute noch ein
So if I have to hear the word profit once more, I'll go crazy. We're not making profit. We are writing or booking profit. We have a total comprehensive income which is negative. So don't talk about profits. Mr. Scheich, I think the managing board is clever, is smart, and the good thing, well, I'm sure you can convince the American investors. I know you have to pay a dividend because you would be thrown out of any American wealth fund. That's the reason. Why don't you say so? You pay a couple of cents in terms of dividend because you need the investors. I'm talking on behalf of voting card 764. It's my smallest voting card. Mr. Kadrenoska, I had asked you about top supervisory board members. Last year you said you increased remuneration for the supervisory board because you wanted top people. I said I regretted the departure of Mr. Reidel. I can't see anybody coming up who is as good or even better than he is. I'm not emotional, but it's so boring. Our results are so boring. They make me depressed. And this is why I want to enliven the atmosphere a bit by putting questions. Mr. Kadrenoska, I put a question which you know is coming. We both know that in Austria there is no jurisprudence on this subject, but nevertheless it should be clarified. In 2011, must have been the Christmas session when you decided that, the success parameters for the managing board were agreed upon, 200 or 300 million. So the maximum being 200% if it's not 200 but 300 million. Of course, I look at the operating EBITDA. When I look at the key figures over the past 10 years, not once did we have an operating EBITDA of less than 200 million. Those are minimum targets, but it has nothing to do with the corporate governance targets of a managing board, a great managing board. The problem is that you've set terrible targets for the managing board. And now I come to my question. And I would ask Professor Novotny not to say anything on that. This supervisory board is going to tell me today what the targets for the variable remuneration for 2012 are, probably set in December 2011. You must tell me, because Mr. Scheich is giving his American investors guidance for the American continent. Mr. Scheiler, you are not allowed to say that. You are a professional investor, and you know very well what a managing board is allowed to do and what not. A managing board is not allowed to give guidance to a certain group, and we've never done that. We've never given an EBITDA guidance to the shareholders. I want to make that very, very clear. Last year you spoke about 500 million EBITDA guidance. Mr. Scheiler, I hope you were present earlier this morning when I said that our medium-term target for 2015, provided the markets are right, is 570 million. Please don't turn things upside down. No. So there is a long-term guidance. This is all I wanted to know. There is a long-term guidance for EBITDA. And now you must tell me what is your target for next year, for what is the target set for variable remuneration. And there is another thing I want to know. I asked you, what will you do to reach investment grade? Or don't you care and pay higher interest? Another important question which I put, but the dividend, you say, dependent on further market development. So it's something, well, how can I explain that? The annual report is published at the end of March, and there you say the dividend will be paid out dependent on market conditions. So were you so unsure at the end of March whether you would be able to pay out a dividend or not in May? And then the share buyback. You said you wanted to use the shares as currency for transactions. Now, I can't really see that. The cash out. I asked about the 65 million disinvestment. 43.7 is for Bramach, and the rest is what? Working capital? I take it's working capital, but perhaps you could clarify that. Now, you're telling me that Wienerberger is standing on strong legs. So I have every right to say that I'm afraid of Wienerberger suffering a knee injury. on cash flow, I wanted to know how the free cash flow is going to be improved. What is the forecast? Only the two of us know that the free cash flow is the only reason for the payout of a dividend. And when I look at the free cash flow over the past 3 years, the situation is dramatic. Unbelievable values of enterprise value added have been destroyed over the past 2 years. And you said nothing about that. I asked you about pipe life. And then I finally got an answer about equity. But again, we are paying more for goodwill than we get. And if you don't increase your EBITDA margin from 8 to 12 minimum over the cycle, we're wasting money. We are paying 162 million for the half of pipe life. I don't need to do the calculation for you. We're paying way above the enterprise value. And then I wanted to hear from Mr. van Riet, or rather back to pipe life. Well, you said synergies. Yes, synergies will be created, but what kinds of synergies? You're not buying such a company simply for a diversification. I'm sure you have included synergies, be it distribution, be it research and development. It's not easy. They're doing something that's entirely different from what we have been doing so far, but you must have been thinking about synergies. And then 12% EBITDA margin. Is that a realizable target? You're not listening carefully, Mr. van Riet. I asked you about the equity of Pipelife and about the debt structure, and I didn't get an answer about the debt structure. So a couple of questions are still open.
Grundsätzlich, Herr Stahler, ich habe einiges schon im Vorlauf.
Well, I think much of what you asked has already been answered as regards dividend distribution. It's not the way you're saying. It's not just that we have to pay a dividend to our American investors to keep them. Let's not talk about that. It's the investors decide for themselves. As far as Pipelife is concerned, we told you what we paid for the company. Mr. van Riet will say something about the debt structure. I told you and the shareholders that we have a target margin of 12% in Pipelife, including synergies to be generated. So we haven't yet taken over the company fully. That's going to happen in the coming weeks. And we are fully transparent in our communication regarding the synergies to be expected and the targets set. And we'll do that after the summer on the occasion of our Shareholders' Day. Goodwill cannot be calculated yet. Otherwise, I would tell you. We're doing purchase price accounting. We are estimating market values. Yes, there will be goodwill, You asked about the 65 million cash flow. Yes, most of that is the Bramag transaction and the rest is sale of property. Most of it is property, real estate. Improvements in free cash flow. I said today that the main emphasis of the managing board is on operational excellence and the optimization of our current business. I never denied that the company in 2001 to 2009 invested a lot of money. Now we have to make the most of that money. And I also illustrated the markets we operate in. We produce building materials and systems in the markets we operate in, and we can only move cyclically with these markets. I tried to show how we've been moving as Wienerberger and where we outperformed the market. You heard today that the managing board is committed to organic growth, and this is the objective of our company. This is our shared interest. There is no divergence of interest between the managing board and the shareholders. That was the objective we were pursuing when we put our portfolio in order. Pipelife is not any company. We've been in a joint venture with Pipelife for 20 years, and we had a chance of putting this on a permanent basis. With all the measures we've been taking new products, improvement in sales, improvements in marketing, better cost structure in production, energy saving, supply chain management, a large number of individual measures that will improve our results. You've seen this year that we were able to increase our prices by 5%. Our business is a volume-driven business, and we succeed in improving our revenues. That's the way we want to take. This is what we're aiming at.
So, jetzt darf ich noch ergänzen.
I said several times that we've been talking about operating EBITDA. The supervisory board meeting deciding on the bonus you're reading about today did take place in November or December 2010, because it was before 2011 that we set the targets. I'm talking about 2011 and the targets for 2011. And then you ask about 2012. This interim target has not been published, and you're not going to set a trap, neither for myself nor for my colleagues. You will not make us make statements which we are not allowed to make, so you will not receive this information. And then top people on the supervisory board. I said in my introduction that we're doing several things. Last year, exceptionally, we increased the number of supervisory board members. Now we are decreasing them again. And then I talked about an evaluation of the supervisory board. You may not have been listening when I said that. We had the supervisory board evaluated by external consultants. We set clear targets, clear objectives when it comes to the recruitment of new supervisory board members. And as I told you last year, supervisory board members don't step down because anybody tells them to do so. We have mandates that expire. And we've introduced an age limit, which concerned Mr. Rauch and will concern Mr. Reidel. We've set this limit ourselves. It's the age of 70. When these things materialize, and one of them will next year, we will be proposing a replacement for, or a successor for Mr. Reidel. And then it's up to you to elect that person or not. We've discussed that on the supervisory board, and we agreed on that. You put a question about share buyback. Mr. Van Riet told you about the conditions under which the share buyback was made. You wanted to know how we are using or will be using these shares. We are not pursuing any projects these days to use the shares as currency, but we operate in an industry with many small and medium-sized businesses. Should an opportunity come up, we can and may use the shares as currency if anything interesting comes up. That was the objective of the share buyback. So we don't have a specific use in mind now. You asked about the debt of Pipelife. 70 million will mature in 2015. Well, that's the year-end debt, 70 million. And it says in the annual report that 1.7 million receivables are outstanding. Last year it was 2.4 million. We have one more request for the floor. A question, yes, a question about the rating. Yes, we want to get our investment grade rating back. I don't know if it's going to be easy because we now have a double B. So we want to be back to triple B minus or plus at least. It's not going to be easy. And this is only possible through improvements of cash flow and net debt. We're trying, but not at any cost. We give priority to our current business. So we're stable for the time being, both our rating. And we're on the same level as Lafarge, Heidelberger Cement, etc. One question is still open from Mr. Weber. Peter Johnson represents the 44% U.S. shareholders. Is he present today? Can't he open up positive business opportunities for the managing board in the U.S.? First question, Mr. Johnson is not present for private reasons, and he does not represent investors from North America and England. As you know, supervisory board members are elected by the AGM and do not represent groups of investors. He contributes regularly to supervisory board members and also in discussions with the managing board. He's a very important asset for our sessions. Mr. Berger. I've been waiting for your comments on my figures of the past 2 years. The managing board got 5.16 million, the shareholders 25 million, and the banks 173 million, and tax 13.8 million. The question is, what's the managing board's comment about getting? The managing board got about 1/5 of what the shareholders got. What you spend for the rating agencies, their work is not for free. The second question concerns Pipelife. If the business improves, will any additional payments be required? Payments to Solveig? And what's the reason for the extreme decline in business in Eastern Europe? Is it due to a lack of finance? I'm sure there is demand for construction activities in these countries.
Mr. Berger, very quickly, there are no changes planned as regards payment to Solvay. This is the purchase price, the 162. Nothing else. 120 million are the costs for both rating agencies per year. The credit crunch in Eastern Europe. Well, let me explain. I think it's important that we talk about this. In Hungary, we had a new housing market prior to 2006 or 2007. It was fairly stable. And now we've had a decrease by 75%. We've lost 75% of the market. Nobody in this room is happy. Me neither. We had to mothball plants. We had to close or shut down plants. It's a fact. The crisis hit these countries strongly. Is this just a matter of financing? Certainly not. There are also other problems, as you can see from the media. There's a government that interferes and intervenes everywhere, that wants to reduce the sovereign debt, and this gives rise to considerable uncertainty in the country. So there's no willingness to invest in housing projects. This is the problem, and incomes, of course, are also low. Then you have the problem with the Swiss franc loans, and that contributed to the financing problem and to the lack of uncertainty in Hungary. So, once again, if we manage to get the results under these extremely difficult conditions, circumstances, and we had a loss of 70% of the market in the United States, and there was a sharp decline in other European countries as well, it means that we are not just sitting back. We're trying day after day to improve the situation, but you have to bear in mind that there are extremely difficult market conditions. The figures that you've mentioned, I don't think the 480 million that we paid to the banks, I don't think these figures are correct. Of course, we need to finance our activities. As Mr. van Riet said, we use the bond market to a large extent. The purchasers of bonds are not just banks. We also have private people who invested, and we are very happy about that. And of course, they get an appropriate interest rate. The dividend, and you're right, the figures and about the dividend and the salaries of the managing board, these are correct. Mr. Staller, please wait a minute. There's someone else who wants to ask a question.
So, der Herr Almeida, bitte, hat sich gemeldet.
Mr. Almeida. Thank you very much. Previous speakers have already criticized the managers' salaries. I have a few questions. What are the lowest salaries in Austria and in the entire group? Now compare this with Mr. Scheuch's salary. Do you feel this is justified? I would say the factor here is 1,500. Is your performance 1,500 times as valuable as the contribution of a worker? Mr. Staller. I'd like to have the Notary Public comment on the following points. The management board has stated long-term EBITDA goals and has committed itself to them. In the remuneration report and so on and so on, short-term variables are mentioned. There has been talk of a corridor. As a shareholder, I asked the CEO about this corridor to get an idea of the short-term variable salary component for the board. This was necessary because between 2010 and 2011, the managers' salaries increased by 124%. I have not received an answer, and please take note of this. And, of course, I would like to vote on individual members of the supervisory board separately.
Ja, aber es gibt Gesetze und Interpretationen dazu.
Well, there are laws and there are interpretations. If I understood you correctly, you're talking about the corridor of the variable salary component for the management board for 2012. The chairman rightly pointed out that by divulging this figure, he would raise expectations on the market which would be misleading unless you know the background. And according to the Stock Exchange Act, any statement that might mislead the market are prohibited. And therefore, my recommendation to the chairman of the supervisory board was not to answer the question. Of course, we could start a legal discussion, but I think I've given you the answer. Again, please, for the minutes, the market today, has received a long-term, the market today received a clear long-term EBITDA target from the managing board. Again, Mr. Staller, I have to correct you. The market that you are referring to has been given this EBITDA target much earlier, not only today. We need to be objective and not emotional. The market will be informed by the managing board in order with all the guidelines, and all the shareholders, all those involved in the market are aware of these targets because they have been communicated by Wienerberger, not just today. Are there any further questions? There's one question that I haven't answered yet regarding salaries at Wienerberger. Please understand that we have a very broad production range. We work in more than 30 countries. We have different collective bargaining agreements, different wage and salary levels. I could not give you a reference value when you compare Russia, the United States, Finland, Italy. Well, there's a very broad range. What I can say is that in many countries we are our salaries and wages are above collective bargain agreements. We also have variable components, not just for the managing board, but also for other employees. So we are taking steps in order to adapt salaries and wages to the performance level. You also asked a personal question as to how do I see my pay, my salary. Well, we have a fixed component. This applies to my salary, to the salary of the other management board members, and to many other employees. You are familiar with this fixed element. We are transparent here, and we have reached long-term agreement, and we have laid down the criteria. There was an exception for the difficult years where we set EBITDA goals which were difficult to reach in order to get back into the profitable zone. Now, it may very well be that next year the members of the management board do not get a variable salary component. So this variable component is linked to whether we reach the targets or not. All right, number 94 once again. Well, I'm not satisfied with this answer. My question was, do you think it's justified? Your salary is justified. And at least you should be able to give me the answer for Austria. What is the lowest salary or wage in Austria? And is the salary, your salary, which is 1,500 times that of the lowest salary, is justified in your view? And I'd like to get an answer to this question. I don't have a problem in answering this question, hopefully to your satisfaction. What I wanted to make clear is that the supervisory board determines the criteria for the salaries of the management board, and it's up to us to reach these goals or targets. So we are expected to reach these targets, and we have to work for that. Let me answer this question, Mr. Staller. So I think we have a fair, justified salary pyramid at Wienerberger. After all, we are an international company. More than 95% of our revenues come from outside of Austria. So we have to compete on an international level. Mr. Gipser, 584. Total costs for the management board and the supervisory board. Well, you find the figures in the annual report. Ladies and gentlemen,
die ganzen Probleme, die da angesprochen werden, werden akademisch behandelt, aber es gibt...
Well, we are getting academic answers to all the problems and issues raised here. But there is a simple answer. The older ones in this room will remember that over the last 50 years, efforts have been made to set up groups of people against one another. The state takes care of the children, it's no longer the families that do that. When you have a herd of people, there are concepts like honor, fulfilling one's obligations, etc., etc. These are important for any community, but we've lost these criteria. We have an elitist group that is greedy, and the same holds true for politics. Stockholding companies, when they become dominated by officials, well, this means we're on the way to communism. It's officials who work for their own pockets. And that's it. And they don't care about the problem of others. Is there anybody in this room who would disagree with me? Mr. Gipser, I gave you time to illustrate the background to your question. So what is your question? Well, last year I asked, how come that you increased the number of supervisory board members from 8 to 9? I asked about the total costs for the management board and the supervisory board. And that includes travel expenditures, etc., etc. You know, people traveling to India in winter, enjoying themselves.
Aber mir hat die letzten 3 Jahre aufgestellt und das war richtig so. Das war ein Milliardengrab und die Herren Manager haben gleich gemeint, na, jetzt werden wir halt den größten Teil unseres Einkommens in Amerika.
Well, managers thought about paying taxes on their salaries in the United States. That would have meant an enormous profit for them. So what is your question? The total costs for the management board and the supervisory report are clearly stated in the annual report. Well, you could give us the figures here instead of making us read the report. If anybody, suggested that I should incur a debt in order to buy shares, I would think he's crazy. And, well, Wienerberger shares now stand between 7, 8 or 9 euros. What a wonderful profit. I'm not an academic, but I have common sense, and common sense helped me to solve problems. Well, I'm just listening and trying to give you an answer. You have to give me a chance to do so. Well, I can answer the question regarding travels by the supervisory board. We take a trip once a year. Last year we went to a company near Passau, and we had our strategy meeting there. So you can figure out how much this cost.
Großes Leben führen auf Staatskosten.
Aber nicht erst einmal.
Well, I could quote examples of people just wasting money. Let me make one thing clear, Mr. Gipser. Wienerberger was one of the first Austrian companies which publicized the individual salaries of its managers. These are figures that are available to the public. The total for the entire managing board is 3.5 million. Mr. Scheuch and his colleagues receive the salaries shown here, and there's nothing else. There's no wasting of money on taking pleasure trips. The only thing that we are interested in is improving results. Nothing else. And I'm not going to reply to political statements. We at Wienerberger are honest, open and transparent. Well, do you think I ought to believe that? Says the speaker. It's not a matter of belief. Let's remain professional. Well, I bought my shares 30 years ago, not too many, fortunately. How come that, well, the shares are worth something like 8 euros and not more? You're rebuying shares by taking out loans. I'd like to have an explanation for that. The number of members on the supervisory board has been increased. Costs have gone up. The cold winter also is considered to be the reason for the poor results, but we've had harsher winters without Wienerberger making a loss. Thank you very much for your contribution. And the speaker says, well, I'm not sure whether you really want to thank me. There's another question from Mr. Alberer, 342. He has asked me to read his question. Is the bonus corridor sufficiently wide so as to be interesting for competitors? If not, why can't you answer the question? I think I have repeatedly given you an answer. I have given an answer. It's been recorded in the minutes. We've had a unanimous decision by the supervisory board, and we are not getting involved in improper statements. Mr. Staller, listen, please. Your problem is that you are not listening. I listen to you. I don't interrupt you. I think the tone of your questions is not in line with the AGM. All my answers have been recorded for the minutes. It would be incorrect to say that I have not given an answer. Any further questions? would you please answer my question, the question that I have submitted in writing? I have read your question, and, well, are the goals, the targets of this bonus corridor ambitious enough so as to be relevant for the competitors? Well, I myself and Professor Novotny have explained that these targets are relevant for the market, and therefore we are not permitted to divulge these goals or these figures. Well, that means that we will see next year whether the goals were really relevant. If not, if they don't start at 200 million or 220, this is not going to be relevant. Mr. Wienerberger, please listen. This is a relevant figure or fact for the market, and the supervisory board is not permitted to divulge these figures, no matter what the bandwidth is. Yes, it's simply not permitted. You've heard what I've said before. 902.
Ja, tun Sie Ihre Zettel ausfüllen, bitte, weil ich sehe das sehr schlecht, da gegen das Licht. Den Herrn Staller sehe ich noch gerade.
Just managed to see Mr. Staller, but not all others. Would you tell the AGM what the intrinsic value of the Wienerberger share is, because we want to avoid justified or unjustified speculation? What is the intrinsic value of the Wienerberger share? You mean the book value?
Der Buchwert dürfte, wenn ich jetzt mich richtig entsinne, bei...
If I remember correctly, the book value is just over 14 euros. Thank you. That's enough for me. There is one thing. No, it's 16.8. Comments are being made without a microphone.
Gut, für mich ist es ausreichend von 14 bis 22. Wir haben Aufholpotenzial.
So we have a potential for value recovery. I'd like to appeal to the supervisory board that the relationship between the workers' wages and the managing board remuneration should be given greater attention in the future.
Ich danke auch für die lange Tradition der
I'd like to thank Wienerberger for a long tradition that was introduced under CEO Schache, which is to provide a written presentation or a printout of the presentation, which I find very useful. On diagram number 6. This is a document which is available to all our competitors. We are talking about a sector, we are operating in a sector with many small and medium-sized businesses. This is why we did not include the percentage. That has been done on purpose. And we are transparent anyway. Mr. Fischer. I'm quite satisfied with the work done by the managing board. Yesterday, at the AGM of OMV, I heard that the CEO can earn as much as 4.7 million. Now, if you were to earn your bonus, how much would you be earning? You don't need to tell me the percentage of EBITDA. Is an EBITDA of 250 or 350? Would that qualify you for a bonus? My variable salary component is limited at 200% of my fixed component, which is disclosed in the annual report. So you can figure out what my maximum remuneration can be. The fixed remuneration was 640,000 euros for 2011. Well, there was a question which was put without a microphone, but the answer is that it concerns market-relevant information that cannot be disclosed according to Austrian legislation. You said that the managing board remuneration can be seen in the, or read in the annual report. Yes, I can read it, but I still don't understand them. In the course of my earlier comment, I asked for a comment from the managing board about the following figures: 5.16 million, managing board 25 million paid out in dividends, costs of capital 173 million, taxes paid 13.8 million. I asked for a comment from the supervisory board on these figures. I never received a comment, and therefore I object to the minutes of this AGM. No further requests for the floor. Mr. Steiler? You asked for an individual vote to be taken on items 5, agenda items 5 or 6. Well, do you really think that I can grant discharge to each and every one of you? I put a question which I didn't get an answer to. I know there are no court rulings, there is no Supreme Court ruling, when you look at last year's corridor, you can draw plausible conclusions. It's not really that secret, but the real scandal is that in December 2011, be it before Christmas or earlier, the Corporate Governance Code speaks of long-term incentives, but if the targets are set in the December session for the coming year, this is not a long-term incentive. It's the wrong kind of incentive. You know that at the European level, there is a restriction of, there will be a restriction or a limitation of variable components to 100%. That's going to come. And the Supervisory Board is called upon by us to think about a limitation to 100% of the fixed component. Wouldn't that be ethically justifiable and more in accordance with the performance? The entire system of remuneration is crazy. It's wrong. It's not good corporate governance. It's just not okay. And I would have thought that you would finally understand that. We've been talking about this for 2 hours, but you still fail to understand that the model as such is wrong. If you could answer that, if you could understand that the model is wrong, why don't you come up with a new model and submit it to the AGM next year? Nobody is going to envy Mr. Scheich. It's not a question of envy. We want an appropriate remuneration system that contains long-term components and in which the variable component is limited to 100%. This is what we want. And that's my deal for the individual vote. And when I mentioned economic value added and cash value added, these are the two essential figures for the sustainable creation of values. To measure these values, hundreds of millions of euros have been destroyed in recent years. I know that the markets are difficult. I'm aware of that. But I don't want to pay you a bonus for being just a bit better than the disastrous markets. So promise me here and today that you're going to completely revise the remuneration system. And I have confidence in you, therefore I do not maintain my demand to vote to take individual votes. Well, Mr. Stahler, what are we doing here? And this is one of the essential tasks of the Personnel and Nomination Committee. We are continuously changing things. 2 or 3 years ago, we made such a change. There is the fixed component of remuneration, the variable component, and the long-term incentive program, which we presented to you 2 or 3 years ago. This corresponds to the current rules internationally on a one-to-one basis. We studied that very carefully. I'm talking about the long-term incentive program. As regards the short-term variable component, well, 2 years ago we knew that we couldn't pay anything, that there would be no bonus paid out, and we decided on a short-term basis, after all the crisis is not over yet, to do things the way I presented them. But this does not mean that we're not going to change them. One thing I can promise you, for 2013, we certainly will have a new evaluation of the entire structure. We will either be in a better position already, or the crisis will be even worse. But I can't promise you anything for 2012 because that has been agreed upon. I move that no dividend be paid out and the entire net income be carried forward to the new account. And then I would like to know the lowest salary paid in the company, at least in Austria. If there are no more questions, suggestion, it says here. You don't need to read it out. Well, we're talking about the EBIT corridor. It's a secret which you are not willing to disclose for reasons of ad hoc notifiability and market relevance. So I would suggest the following. The text could read, the AGM of Wienerberger notifies on the basis of an ad hoc question put by a shareholder. EBIT corridor is as follows. Well, he's going to tell us that ad hoc notifications can't go out on an ad hoc basis. I think the term ad hoc notification was misleading. It's not a problem of issuing an ad hoc notification, but this information that concerns the future, if that were to be disclosed to the market, either ad hoc or through the AGM, that would be a risk of influencing market behavior. It would be equivalent to market influence or market manipulation. I would repeat my recommendation not to disclose this information. So apparently I misunderstood. So the supervisory board is not allowed to mislead the market, but he may very well mislead the participants in the room. Well, I fail to understand. If 12% EBITDA margin is the guidance for pipe life, isn't that an influence? Doesn't that mean influeing the market? Well, I greatly appreciate you. I've known you for many years, but this is really getting parochial. That has nothing to do with what we want. That is transparency and confidence. Well, I think we should leave that subject aside for the moment. I agreed that for 2013 we are going to deal with the remuneration model, and the criteria will be different from what they are today. But the long-term incentive program will have to meet international criteria. We have to take note of the fact that we are living in an environment of very high volatility, and decisions have to be taken. So for the moment, everything is highly volatile, and all I can promise you is that we are going to redesign the model. You're putting the same question every 2 minutes. So you're not moving to take individual votes. No, you're not. Thank you very much. A question was put regarding minimum wages in Austria. In our company, the minimum wage we pay is 1,500 euros for salaried workers. For wage earners, the structure is different. The basic wage for 1 hour is 10 euros plus fringe benefits. So it would be about 80, my basic salary would be about 80 times that of a wage earner in our company. All questions have been answered. Despite the criticism expressed, I use the occasion to thank the managing board and all employees of the company for their work in the past year. ...334 shareholders and shareholder representatives are present, representing 49,691,630 shares, and they hold the same number of votes. So today's AGM has a quorum, has the necessary quorum on all items of the agenda. So the list of attendance is now available, and it can be inspected at the entrance to the room on the terminal. The list of attendance will also attach to the minutes of today's AGM. So we move on to the votes. I've already read out the proposals, and you have them in writing. I would ask the notary to certify the decisions of today's AGM. Before we proceed to the vote, I should like to point out that those shareholders and shareholder representatives that are concerned by the decision taken by the proposal have no voting right. This is being considered by the counting system when determining the attendance and when calculating the yes votes. We are going to vote according to the subtraction procedure. No vote votes and abstentions are counted and subtracted from the total number of votes represented. The result is the yes votes. For this purpose, presence is checked continuously. You have received voting cards with numbers. If you want to cast a no vote or abstain from voting, please raise your voting card until the number has been read out. I would ask you not to leave the room while we are voting. Item 2 on the agenda, resolution on the use of profit as shown in the annual financial statements. Do you still insist on your counter-proposal? So, Mr. Almeida, we're first going to take a vote on the proposal as is, and if it's rejected, we will take a vote on your proposal. So, those against the proposal, would you please raise your hands and wait until it has been counted?
94, 383, 158, 118, 341, 354, 871, 1234, 199, 153, 763, 764, 765, 342, 96, 101, 359, 396, 394, 393, 902, 39, die Zahl 341 habe ich bereits verlesen. Keine weiteren Gegenstimmen.
Wenn Sie sich der Stimme enthalten wollen, heben Sie...
Those of you who want to abstain from voting, would you please raise your voting cards?
Gruppenkarte 1, Gruppenkarte 6, 508. Keine weiteren Enthaltungen.
Darf Ihnen das Ergebnis...
So the result is yes, 48,768,942. That is 99.92%. So 0.078% no votes. So that corresponds to 41.79% of the share capital. So the motion has been carried. Regarding the use of the net profit. So, Mr. Almeida, your proposal will not be put to the vote. I continue with item 3, granting discharge to the members of the Managing Board. Discharge should be granted en bloc to the members of the Managing Board in office in 2011. Those shareholders and shareholder representatives that are concerned by the decision do not have the right to vote. So who is against the proposal? Abstentions? So that concludes the voting. Yes, 49,660,219. That is 100% or 99.999%. No votes 11. Votes cast 49,660,230. That is 42% of the share capital. So the proposal has been adopted by the necessary majority, and the AGM has thus granted discharge to the members of the Managing Board for 2011. We move on to item 4, granting discharge to the members of the Supervisory Board for 2011. The proposal is to grant discharge to the members of the Supervisory Board for 2011. Shareholders and shareholder representatives that are directly concerned do not have the right to vote. So who is against the proposal?
...42, 383, keine weiteren Stimmen.
Wer enthält sich der Stimme?
Abstentions?
902, 94, keine weiteren Enthaltungen.
Schließe die Abstimmung.
Ends the voting. And the result is yes votes 49,598,8929. That is 99.87%. No votes 63,657, 0.1282%. Total votes cast 49,662,486. That is 42.2563% of the share capital. The proposal has been adopted by the necessary majority of votes, and discharge has been granted en bloc to the members of the Supervisory Board for 2011. Item 5, reduction in the number of members on the Supervisory Board. Who is against this proposal? No votes against. Any abstentions? No further abstentions. So we don't need the computer for that. Yes votes 49,661,613. That is 100%. No votes 0. That corresponds to 25.65% of the share capital. So the proposal has been carried unanimously, and the number of supervisory board members will be reduced by 1. That has been decided by the AGM. Item 6, election of the auditor for the annual financial statements and the consolidated financial statements for 2012. Votes against.
...683. Keine weiteren Gegenstimmen.
Wer enthält sich der Stimme?
Any abstentions?
70. Keine weiteren Enthaltungen.
Das Ergebnis lautet Ja.
The result is yes votes 49,654,839, that's 99.98%. No votes 6,044, that's 0.012%. Total number of votes 94,601,243, that's 42.25% of the share capital. I note that the proposal has been adopted with the required majority, and the AGM has elected KPMG as the auditor for 2012. Item 7 on the agenda, amendments to the Articles of Association. First, we will vote on amendments regarding securitization of shares, and in a second step we will vote on the reduction of the control threshold for takeover. We proceed to vote on the amendment to the Articles of Association regarding the securitization of shares. All those against the proposal?
Keine weiteren Gegenstimmen.
Wer enthält sich der Stimme?
Abstentions? No abstentions. The result, yes votes 46,041,643, that's 92.6893%. No votes 3,631,438, that's 7.3107%. Total number of valid votes 49,673,081. That's 42.2653% of the share capital. I note that the proposal has been adopted with the required majority, and the AGM thus has opted for changing or amending the Articles of Association. We now proceed to vote on the reduction of the control threshold. All those against? No microphone. Well, Mr. Scheuch, I think, gave us an explanation, but I don't know whether the Supervisory Board is in favor of this proposal. Well, I think I made it quite clear in my introductory statement, and Mr. Scheuch elaborated on it. This is a proposal submitted by the Management Board and the Supervisory Board. We feel that this is more favorable for the shareholders, particularly small shareholders. We are in favor of decreasing the control threshold. It's an advantage for the shareholders. Well, I don't want to start a discussion, but I think that, well, it's difficult to actually now to reach or to attain this threshold. Well, there's a saying among American investors, the more free floaters you have, the more leeway is there for the management board. Well, Mr. Staller, as the managing board, we don't consider ourselves to be administrators. We are the management. And as indicated, this is to improve transparency. We are obliged to make things clear, and 42% of shareholders are present today, so someone with 28% of the shares could actually do whatever he or she wants. Now, we, the management board and the supervisory, is giving you an opportunity to vote on this issue. And if someone wants to buy into the company, he will have to submit a written offer. It's in the interest of shareholders. What you asked for the supervisory board's opinion, I'm the spokesperson for the supervisory board since we discussed the agenda and we proposed the agenda together with the management board. I can tell you this is a unanimous proposal or decision. So let's proceed to the vote. All those against it?
Gruppenkarte 1211, 1141, Gruppenkarte 1000, 440, Gruppenkarte 1, 199, 153, 1234, 763, 765, 764, 9, 11, 584, 158, 354, keine weiteren Gegenstimmen.
Stimmen ist, wer enthält sich der Stimme?
Any abstentions?
83, 383.
Ja,
Keine weiteren Enthaltungen.
zur Änderung brauchen wir es dann.
Gut, ich darf die
Here are the results of the vote. Yes votes 45,702,232. That's 92.0063%. No votes 3,977,08. That's 7.99%. Total of valid votes 49,672,940. This corresponds to 42.2652% of the share capital. I note that this proposal was adopted with the requisite majority. So the Articles of Association of Wienerberger will be amended by Article 28. I proceed to item 8 on the agenda, resolution on authorization to buy back own shares and sale of treasury shares. All those against this proposal or motion? Abstentions? Here are the results. Yes votes 49,028,726. That's 98.7425%. No votes 624,378. This is 1.2575%. Total valid votes 49,653,104. This corresponds to 42.2483% of the share capital. I note that this proposal has been adopted with the required majority. The AGM has authorized the board to purchase and sell own shares or treasury shares of the company. Ladies and gentlemen, this concludes the agenda of the 143rd AGM. Thank you very much for your interest and active participation. And all those who have not had the time to enjoy the buffet, you're kindly invited to do so now. Thank you very much.